Hey Nandan, how you doing?
Doing all right, Richard. How you doing?
Awesome, awesome. I see Igor just arrived as well. Let's just add him to the stage.
Hello,
Igor,
everyone.
how are
Hello.
Hey,
you?
Igor.
How's it going?
Crazy.
Crazy. What are you making some more big trades there? Or what's happening?
Yes. I made special video for you.
Oh, perfect. Can't wait to
Oh,
see it.
nice.
All right. So before we do get started, guys, just a quick hello to our viewers. Welcome to the morning session. Again, if you've got any questions about anything trading related, then please do post them, and one of us will be more than happy to answer that for you. All right. So I don't know, Igor, do you want to kick things off? Show us what you recorded there, or Nandan?
Okay. I can start to show you my recording today.
Okay.
Yep.
It will be interesting. I will do that
Okay.
very fast.
Well, let me just get my screen properly done here. Sorry,
It was one
guys.
long video.
Oh, good.
Just there is some problem right now. I'm frozen.
Always a technical glitch somewhere.
Yes, because I want to share my screen, and this is usually the problem. But I hope soon that I will be visible. I cannot see right now. You
No, I don't
do
see
you see
anything
me?
here.
Say again, Igor.
Do you see me right now?
Yeah,
I
we
can
can
see
see
you,
you.
but not your screen. Yeah.
Yes. I'm waiting to see what's happened right now. There is some glitch.
All
Yes,
right.
I think that I will be soon. I will be soon live.
Okay.
Yes, and I hope that you will see my video.
There you go.
There we go. Perfect.
Excellent. So there's no sound. Before I show this video, I just want to tell you the title of this video. The title of this video is Psychological Horror of the UK Open. So this
Nice.
is the title of this video just before you start to watch. And later I will just describe all details. Right now I'm waiting to open. While we are waiting that, I can very fast just show the major problem for today.
Mm-hmm.
The major problem was for British pound dollar. Actually, I will just little bit zoom out this video. So what's happened is that we had crazy Asia Open. So I use that word crazy because it's an unusual thing. Based on statistics, Asian Open should be 0.2% daily average true range. So if we have average 100 pips, it should be average 20 pips during the Asia between the low and high. And right now, we had that moment that from the beginning of the session, we made, I think, from 60 and 50, 115 pips we made during the Asia session, which is
Wow.
really insane. And
Mm.
in that moment, I need to find a strategy. So as you know, I couldn't buy Asia low because I knew that if you want to buy Asia low, we need to go more than 100 pips down. So I need to create the new strategy. The next problem is that the pivot point area is actually only pivot point today, because the way how I calculate this area is the all formulas that we can use to calculate the pivot point, all of them give the same number, the pivot point value. So if you you use two numbers, low and high, and divide with 2, or if you use two numbers, low, high, plus, close, divide with 3. All of them give the same number. So it was the session like that, very strange, and this is why it was very hard to trade. Now I just want to see what's happened with my video. I'm trying to open. Yes, finally. So I will just show the moment that we enter into the UK range, because that moment was a little bit critical. What I started to do, and I think that later during this session, I will talk about that problem. It's a really technical stuff, and I will maybe 10-15 minutes talk about that, but later after you, because it is something that bothers me. It's related to the liquidity sweeps and liquidity grab, and I will talk about that with practical examples on British pound dollar.
Okay.
Because we on support and resistance on both levels, we have the both. So it's a really strange thing, and I will just talk later about that. And now I will talk about my trade. That it was so terrible that video doesn't open. So I hope that it will open right now. I don't know why is this. Yes, finally it will be open in just a couple seconds. So in the moment, what's happened, we touch really high. It was the 1.2860. So we made a breakout above 1.2850, and it was a really Asia low, one very strong movement there. And this was my trade, my idea of trade. So my stop loss should be 1.2790, because we had that important support between 1.28 and 28.15, and I was 10 pips below to protect my position, just because that zone of 1.2790 to 1.28 is the zone where we can see some kind of liquidity sweep, because it was a former resistance, and everything did as I wanted. I put this stop loss, put target, but I didn't hit the button. I waited the price come to me, and I will show you how I'm waiting. So I drew, as you can see on the chart, this red rectangle. So this is the zone when I want to enter. It's a zone below 1.2815, because now I see how price is really hard, and I'm almost ready to enter into the trade. And I just write on the screen, as you can see, that this price manipulation is a 30 minutes opening range. So this huge bearish candle that you watch, it's a typical candle that exists in the first minutes when London opening range starts. And I expect that's why I wanted the price come to me. And I wait a little bit more. I wait as low price as I can get. And in one moment, this will be that moment, I think. I hope. I will just, yes, this was that moment. At 1.2812, 13, I enter into the trade. And I wait what will happen. Usually this is normal. Of course, I don't want to chase the lowest low. I have enough, it's a 25 pips or 20 pips, more than 20 pips stop loss. So it's enough to hold. And everything was fine. And I realized, okay, excellent. I see some improvements. As you can see, this is the 1 minute candle. We were on support. We are going more and more up. As you can see, really good setup. Everything was right. And in one moment, it was at 9:25. I just wrote on the screen. I realized that there is some kind of rejection. Usually in 9:30, in the first half hour, we finish this crazy moves in opening range, and then we start to follow the main trend. And I realized that this is the little bit strange, because the price should not be like this. But of course, I'm still waiting what will happen. And I wait and I wait. And this is the problem. Almost 1 hour will pass, and we have this kind of the movements on the chart. As you can see, okay, it's a range, I understand. And what's happened here is that in this moment, I add another trade, just a little small trade. It's a just trade that I try to catch the new low, and I know the stop loss is minimal because we are just 10 pips from the stop loss. And this is something that I do just to increase risk reward ratio. And if I lose, it's a 10 pips, no problem. So so I have 2 trades right now, and I watch, of course, the chart, and this is something strange, because we are almost 1 hour and the price still didn't go in the direction of the bullish trend. And I felt a little bit uncomfortable in these moments, but I wait still to see what will happen with price. And as you can see, everything is hold. But I wrote this reverse late too much, because this process is the duration is strange for me, because the duration should not be like that. And now we see the push, and I wrote promising bounce, because this is the moment that I expect the bounce, and everything will be fine. But as you can see, it's a little bit 1 hour almost passed, and it's a little bit sideways, which I don't prefer. I watch and watch, and on the end of this video, I lost the trade, because it will touch the level at 1.2790, and it will be very, very fast. I hope that we will see that. Just a minute. I hope that we will see that. I touch and I lose that 2 trades. But I just want to show you the chart. This is the end of the video. Yes. And I want to show the chart what's happened after that. And this is why the title is the horror of the UK opening range. And this is the moment which I will just show you. 2 pips down after that, and then price started to go up, maybe around the 50 pips.
Wow.
So it was just my stop loss didn't hold, and just went and go, and it just I was so surprised. I think that I did everything, my stop loss, my everything. But like I said, later when I explain the whole concept and the whole problem that we have, especially with trade majors, you will see this is the reason why trading is difficult. So I had a good entry point. I made an excellent stop loss. Everything was perfect. And then I realized that my stops didn't, everything was right from my side, point of view, technical and everything. Of course, when you watch these movements right now, it's we figure out that 1.2790 is a not real stop loss. It's not support anymore as it used to be, but in that moment it was. And for example, the same time euro dollar, we didn't have that kind of problem. So we had, for example, the highest high just in the moment of the euro opening range. Then we have a small pullback. We can say small, but it's 2 big candles. And after that, price right now, we are again on resistance. So that pullbacks and that sideways market conditions we didn't have for euro dollar, for example, just for British pound dollar. And there was no news today. So today we didn't have any kind of important news. I watched even the smallest news related to British pound dollar or something like that. Nothing. And this was the really problem that I have today. So I just want to share that with you, let me just stop this my screen. This was the trade and feelings and everything, because I know that a lot of traders, they have the similar situation like this in trading journey.
Yeah.
I know
Yeah.
a lot of
I mean, it
traders,
happens all the time.
Yeah.
To be
yeah,
honest.
yes, it's
And the worst is if you were sort of right, but the thing is, there's no right and there's no real. Well, they can be wrong.
yes,
But right
yes,
is following at least your strategy, and then the market just pips you out and then goes in your intended direction. Yeah, it's a bit
yeah,
gut wrenching, but
what hurt is when you create a beautiful stop loss and just miss for 1 or 2 pips.
yeah,
Then
Yeah.
I think that in some hedge fund that they use expression for that. It's a wash up. I heard that expression from them. They
Yeah.
exactly wash up. That means that you miss for a couple pips and you lose position because of that. And then after that, going your position after that.
yeah,
So instead of the winning trade, you have a losing trade.
Yeah.
So it's a really disaster. But of course, it's not disaster in the trading because I didn't risk a lot of money and everything was fine. But this happens when we have this Asia Open extraordinary. So my goal will be in next few days to analyze all Asian Opens when we had a 100 pips or something big Asia Open,
okay,
just to see to make some conclusions how to react, because I know that will not help me, because the market is unpredictable and it's always the game of theory and probability. But I just want next time to have maybe a little bit improved edge, because
well, statistical advantage. I mean, if you can find something that stands out, that generally occurs when you do get that sort of 100 pip range during that open, then was it during the which session did you say? Singapore session.
It's a UK session.
UK session, yeah.
UK session. It's
Then then that could be useful. Now, I do a lot of the same sort of stuff. If I especially sit during a drawdown or something like that, go back in the charts, stop trading. Well, I specifically do that, and try to figure out, is it me or is it just market conditions, or how can you improve yourself? Because in the end, you can have a strategy and all that stuff, but if you don't sort of if you stop learning, then in the markets, then that's when I think you're going to get punished at some stage. You can never know it. Always try to keep that edge and keep up with market conditions.
Yes, you're absolutely right.
Right. Yeah, you can do everything perfectly at times too, and you still end up getting your face in the mud. It's just consistency. That's over time. If you can prove to yourself that you can make positive pips and you follow your rules to the bone, then then you'll see your positive results. But of course, you can do everything perfectly. You have the best setup as possible, and man, I can't tell you how many times that's happened to me. I had the best setup possible. Great momentum going, great stop. It's a short, tight stop. I got all my risk perfect, and within the second, it's just everything goes haywire and it goes the opposite direction. And it sucks, but that's reality that I think you got to understand and accept, and just keep moving forward that way.
The biggest problem is when you make a loss. Okay, you made a loss, no problem. The next question that your mind is making is, what should be the bullish bearish point of invalidation point? Where should be my stop loss? From which level I'm bullish and from which level I'm bearish right now? Because after that, when you hit that stop loss, you are a little bit confused. For example, right now, my stop losses and the ideas, I a little bit lost right now. So I need something real, some beautiful reaction, some V shape. I just need that to see on any side, just to realize where is the right moment when I can put the stop loss. So right now, market is a little bit tricky. So I just wait for you, Nandan, just to see your heat maps. So
of course.
if you want to share that, I just want a little bit to think about that.
Of course, let me pull that up really quickly.
Excellent.
Okay, hopefully you guys can see it now.
There we go.
Okay, actually, let me go into the backup one. It's a little clearer for everyone to see. Okay, so yeah, today in the we had movement in both the agent session and the main session. In the agent session, we had, for me it was yesterday, the agent session. We had dollar strength that came into play. Dollar weakness that came into play, and we had Aussie dollar strength and Japanese yen strength as well. Now, in I first wanted to go over the spreadsheet and show what I'm seeing in the market currently. So I just filled this spreadsheet out, and if I look at the U.S. dollar first, I don't really see much alignment that looks like either of these two boxes here. So largely the U.S. dollar is mixed. The Swissy remains the strongest currency in the forex market, considering the larger time frames. Now, what we see here is the only pair that's not really trending against the Swissy on the 4-hour is the Swissy yen. So to me, that lights off a green light saying, hey, the yen must also have some strength for the Swiss yen to not be going anywhere. Remember, you have to take the Swissy yen and see what is the Swissy doing against all pairs, and then the yen, what is the yen doing against all the currency pairs, and then you make your decision based off there. But as of right now, the Swissy is strong, and the Swissy yen is currently not going anywhere on the 4-hour.
Okay.
So that indicates that the yen is starting to strengthen. We can see that on the charts, on the 4-hour and the daily. We do have yen strength now. The euro, it's largely mixed. We do have a very tiny, slight strength bias, but I ultimately don't think anything of it. I just think it's more so neutral. It's more easily to be pushed by a stronger currency like the Swissy or the yen. Going to the pound is completely mixed. You got pairs going in either direction. The daily time frame, you got some pairs going weak and some pairs that are strong. So nothing really on the pound. This Aussie dollar still does have some remaining weakness on the larger time frames, but the shorter time frame, the 4-hour momentum of weakness has kind of come out, and we saw that on the heat map right now where we had some strength. So the trends, we'll take a look at those charts, but as for right now, the Aussie dollar is one currency group that I would be interested in looking at. Canadian dollar is an interesting one. I did see some interesting setups with the Canadian dollar. Mainly the Canadian dollar yen. Another thing I wanted to point out was the Aussie dollar and New Zealand dollar have been, they got killed last week, and they have made significant movements these last couple days. So Aussie and New Zealand dollar are both related to gold, loosely correlated to gold, and Canadian dollar is loosely correlated to oil. So I wouldn't be surprised to see more Canadian dollar weakness come into the market. But again, there is too much. The Canadian dollar just hasn't chosen a complete direction yet. But I'm just putting this out there that I wouldn't be surprised if the Canadian dollar showed some weakness going forward. New Zealand dollar, we do have some weakness on the daily charts. The 4 hours are completely going sideways. There's no trends available except against the Swissy and the yen. We'll take a look at those charts, but I would say the Aussie dollar is definitely still weaker than the New Zealand dollar. So with that being said, taking a look at this heat map, I completely missed these moves yesterday in the Asian session. Again, I hate trading in the Asian session. I never I've never found it to be enjoyable. Consistently I'm the Asian session, the type of movements you have in the Asian session are either consolidations, random movements, or just if it's not news related, I don't want to trade it. So this is definitely news related with the tariff news that came out yesterday, but unfortunately I just wasn't in front of the computer at the time, so I completely missed the dollar moves and the Aussie dollar strength moves as well. The pound, today the best currency to trade in the main session was the pound Aussie. You can see it's at a 1.73% movement, and it's a huge movement. So we'll take a look at the charts, but you can see we have consistent pound strength and consistent, pound weakness and consistent Aussie dollar strength in the market. So just taking a look at this chart here on the pound Aussie, one thing you do have to take in mind, what I like to do is when I see a potential trading opportunity, I like to start on the higher time frames first, and then go to the lower time frames and see what I can get out of it. So larger time frames, the D1 and the weekly, indicate that we're in strong uptrends. The weekly is certainly in a strong uptrend. The daily is starting to consolidate, even though we're pointed up. I'd consider this a pair consolidating on the daily time frame. The 4 hour is in a nice range. We got a really nice range from 2.15 all the way down to 2.10. And taking a look at the 1 hour, if I go a little closer, we can see that this pair is pushing down. If you got into the pound Aussie today, I would certainly hold this trade, and I would wait until you certainly have potential all the way down to the 2.103 area. It's currently moving down right now as we speak. If I go into the 1 minute time frame, you can certainly see this pair making a strong move to the downside now. So the only caveat to this pair is look at this heat map. You are at a 1.76% move. You're pretty much late to this move. I would consider you late if you tried to get in right now. If you had to absolutely get into this pair, I would significantly scale back and be willing to take pips earlier. But just because the percentages are on the higher side, even though we have a slingshot, which is consistent weakness against consistent strength, I'd still warrant to scale back as necessary. You're not at the beginning of the move. You're not at a fresh move. So you have to take that in mind. The moves, when you get further into a movement, they become less stable. And you'll see, if you're in the beginning of the move, you have a really smooth move down. It's a nice, consistent, stable movement to the downside. But when you get later into the moves, you start to get reversals and pullbacks, and that is something you need to be worried about, especially since we are approaching a significant level of support of this range. So other than that, I think this was the best opportunity you had in the market today. Good on you if you got into it earlier. If I was in this trade and I got into it earlier, I would certainly hold and get my stop to break even, and take some profit and wait to see if this pair would continue down to this to support, which is 2.10. I'd certainly be willing to take pips or take profit earlier. Maybe at 2.106 or 107. So just monitor how that pair continuously reacts to those certain areas. But on trend wise, looking at the larger time frames, I did see yen strength coming into the market. So take a look at some of these yen pairs. Aussie yen, we have long-term Aussie dollar weakness, but the current momentum in the market shows that the Aussie dollar was strengthening. So this pair on the 4 hour, first let's start on the weekly time frame. We're in this massive downtrend on the weekly time frame. The daily is showing a fresh cross to the downside. These moves have been absolutely just massive. I mean, this is a 600 pip move to the downside, and the current range we're in on the 4 hour is about a 400 pip range. So this pair is ranging. What I'm looking for on this Aussie yen is for it to break its support level and break the support level of this range at 86 flat, and potentially continuation down to 82.40 around that area. That would be my next ultimate target for this pair. Now, moving on to the next pair, the Swissies, again, they've had really strong movements to the downside. I mean, a lot of these pairs have broken historical support. Swissy is still the strongest currency in the market long term, but for the Aussie Swiss, again, we don't have any historical support at all. So I'm just waiting for a break of these lows here at 0.49973 or just 0.50 flat, and then I'd be monitoring this pair to potentially get into its downtrend. So The best pair, in my opinion, was the Canadian dollar yen. I really like this setup, and let me move into Canadian dollar yen. Okay, so taking a look at this monthly chart, we are in a fresh downtrend on the monthly chart. We are currently at a major area of support. The major area of support is, let me grab a little line here for you guys to see it. 101.4. We're pretty much there, and we're kind of just consolidating and seeing if we're going to break that area of support, or we're going to reverse off and continue messing around in this giant range that we got going on. But what I'm looking for is a break of support at 1014. And if it breaks that level, man, I really do feel confident this pair can push all the way down to about 9,500. Just looking at this pair and the dollar yen, let me go into the yen pairs really quick and let me show you the dollar yen. I believe Igor went over this yesterday as well, but this chart looks similar to the dollar yen. If I go into the monthly chart, the Canadian dollar yen just seems like it's lagging behind. So um, again, commodities have been getting weaker. Aussie dollar has been getting weaker. Unfortunately, today we didn't have that continuation of weakness, but larger time frames do indicate there's still weakness in the Aussie dollar and New Zealand dollar, and we had major pullbacks on gold. So uh, if that weakness does continue, I do see the Canadian yen potentially breaking the support and continuing all the way down. Now, Canadian dollar, we don't really have much support from the Canadian dollar on the higher time frames. Again, Canadian dollar is more neutral. The main driver of the CAD yen to go down for right now is the yen pairs. The yen pairs are showing much more consistency in strength. So if this pair was to move down now, I would suspect it would be from the yen strength, and ideally I would want the Canadian dollar to weaken. And if it does continue to weaken and both currencies start to go in the same direction, which is Canadian dollar weakness and yen strength, I certainly do think we could have a beautiful entry here into this trend on the monthly time frame, and there is let's see how many pips of potential we got. We got about 600 pips of potential to the downside. So I think this is definitely a pair I'm going to be watching these next couple days and see how it forms. But other than that, again, the market has just been making these massive moves. So I'm paying attention to the heat map. I'm looking at what is going on in this heat map, what is showing me consistency, and I'm pretty much just going based on what this thing is telling me to do. Unfortunately, I missed these moves, but you know, the market is so volatile right now. It almost doesn't even matter if there's a trend in place or not. You're going to get massive 1% moves, 1.5% moves like it's nothing. So the heat map is definitely a great tool to have in this moment of time. But at the same time, you have to remember the heat map is only a tool that tells you how far a pair has moved. I really would like to see consistency, but I'm keeping in the back of my mind that uh, despite having large moves or despite having consistent strength and weakness, we can certainly reverse and especially if we're not in a trend trade, we can have whipsaws that occur. Especially with the market being so volatile. But it is certainly helpful when you kind of don't know what's going on, what to trade, and there's a lot of action going on. The heat map kind of points you in a direction to say, hey, you should probably pay attention to this pair. And today it pointed to the pound Aussie. So looking back at that pound Aussie again, um, if I looked at the 15-minute, sorry, the 4 hour, let me get rid of these indications here. You definitely have room to the 2.10 area, and I tried to take a trade earlier today. With this 1 minute pullback, I tried to get into this pair here. I did snag about 20 pips to the downside. I saw this pair started to consolidate at this 1 minute time frame. I did not like the way this pair is consolidating. I want a clean break. When I get into a trade, I pulled back. I now see the trend indicator start to fall. My stop loss is pretty tight around 2.12. And if the pair does reverse off there, I'm okay with getting stopped out. But I have such a tight stop loss, I'm able to go a little bit more aggressive into my entry, which is down here at 2.118. I was looking for a clean break of this support level at 2.115. Unfortunately, it did not happen. It definitely touched that area, but you see these two candles here, they just went completely sideways, and that spooked me out. I did have I took some lots off, and I let my position. I pretty much took my whole position off at that point. I didn't really. I got spooked out, and I should have left some lots in and allowed this to continue. I wouldn't have been stopped out. So that's unfortunate, but it's part of the game. You can do everything right, and well, in this case, I didn't do everything right, but it goes to show you have to be able to adapt to market conditions, because I was late to this move. I wasn't at the beginning. The percentages were already high on the heat map. So remember what I said earlier, you get more unstable movements. This portion of the movement is not as clean as this portion of the movement. So that's what happens when you get deeper into a move. You start to get more unstable conditions and more harsh pullbacks. So fortunately, I got spooked out of a trade, but this wasn't really anything that I saw. I just consider it a break-even trade, even though it's slightly in positive pips. I didn't really think too much of it. I'd like to get a lot more pips in my pocket for it to be to consider it a trade worth discussing. But unfortunately, nothing really happened today. For myself, I wasn't really able to capitalize on it, partly due to my own error. So that being said, that's pretty much all I got today. Lots of volatility in the markets. You got to pay attention to keep your head on a swivel. Emotion. It's so easy to let your emotions take control when you see things moving, with extreme volatility. But keep yourself calm and collected as best as you can, and have a game plan of attack and move forward there. But I didn't really have anything much to go into. It's just that one little trade setup, but nothing really happened with it. Didn't really go anywhere. Yeah.
At least something happened.
Yeah, something happened. At least it wasn't a loss, but it's not. It wasn't, in my opinion, anything that's crazy that I was like, oh my god, I have to talk about this trade entry. It's just more of a whatever. It's like nothing happened. That's how I'm treating this pair or this trade that I took today.
Yes.
Good stuff. I'll just quickly share mine, and then I think, Igor, do you still want to talk about that? The thing you wanted to talk about. What was that again?
About liquidity and that stuff.
All right. Let me quickly just go through my markets.
Yes.
Again, I'm looking at the NASDAQ, the S&P 500, as well as crude oil. What you see is the NASDAQ. Again, yesterday we've had these beautiful, and the day before, these beautiful reversals during that first 2-hour time window that I follow between 9 and 11. So unfortunately, it sort of made double tops with the previous day's high yesterday. Didn't give me that sweep that I'm looking for. So I probably need to get a little bit more aggressive. This happened last week as well, where price just gets very close to a top. It doesn't pip it or break it, and then you get a reversal. We had a similar situation. When was this? At the beginning of the week, where price again, this actually during the overnight session, didn't reach it, gone into this high over here, which actually was taken. I don't have data until this high, and it was set on Friday last week, but that's where that high was. And again, you see, it didn't break it. It just moved into it, and bam, you got a reversal lower. So either got to look for maybe again, like you guys are saying, adapt to market conditions, because things aren't really working as they generally would, meaning that you want to see a break of that level and then a reversal. So if you don't get that and you do start seeing a reversal, maybe wait for like a 1, 2, 3 type move, and then assume that the trend has changed. If it already reached at least an area that you're interested in trading. If you don't get that break, because it's something I've been seeing quite often as of late with the volatility. But anyway, long story short, today Got a few clusters of highs here around about 17,264 and 17,293 to the upside. Price is already broken above that. So today we actually have a level or zone that's been broken during my time window. So I would sorry, this is on a 5 minute. Doesn't matter, it can be on a 1 minute. Sorry, that was on a 1 minute, but should explain things on a 5 minute here. So the next step would be to go to my 1 minute time frame. And then I want to see a price structure break, or break of structure, as most people call it, the BOS. To the downside, this is, right? So the problem is the price structure after price broke that, and we had this little drawdown to the downside. It's pretty far away because it's just like one strong move into that high, a little bit of a decline, and maybe price is heading up higher now again. So if price were to, and this is not my game plan here with the NASDAQ, I think the same thing's happening on the ES. If price takes out this recent high around about 17,424 and then starts declining, then I'll use this structure high or higher low, right? Maybe another one forms in between here before price takes out that high. That will be even better. The higher up, the better. And if I do get that weakness, then and a price structure break of structure, and a fair value gap, then that would be, a green light to get into a trade. So I'm closely watching this. I think price will potentially break that level, 17,422. Again, are we going to first have a structure or a little bit of a drawback and up? Who knows? But we'll see. Similar thing here on the S&P 500. Also had a break, and then we had a bit of weakness. That break was just the overnight session high, which was at 5024, right? So now I want to see weakness. But maybe like the NASDAQ, maybe price will pip that high first. Maybe it will just continue going. So it's all about watching what price does as well, right? So you can just anticipate something to potentially happen. And if it does happen the way you anticipate it, then you get into a trade. If it doesn't, continues higher, I'll sit on the sidelines. That being said, if price does not break this high, and the same thing goes on the NASDAQ, then I might have to consider what I talked about just earlier. Assume that this is a price structure break, a 1, 2, 3 move to the downside. If I do get then a fair value break at that first lower low here, if this obviously works out, get a fair value gap a little bit higher up, then I'll use that to get into a trade. Be a little bit more aggressive, is what I'm trying to say. Then crude oil. Same thing that I've shown you a little while back is that happened on the ES and the NASDAQ. Price again moved into this little zone yesterday, made sort of a bit of a double top, did not break these highs, and one heck of a rejection back downwards. So this is the type of situation that I would try to be looking for if price does not give me. Sorry, where the hell did that go now? Bear with me. See how price moved into these highs. It didn't break above that zone, but formed a little bit of a lower high here, and then it broke down to the downside. Problem is, price structure on the downside here was way down here if you wanted to trade that 1, 2, 3 break. Quite massive swings, but yeah, it's something I'm considering. Hopefully the swings are just a bit smaller so you can try to get in as high or as low as possible to that actual swing point. Right, so currently we got a cluster of highs around about 57.80-ish, 57.84. Price is currently heading towards those highs. Again, if we get a break of that with a reversal lower, switch to 1 minute. Well, I'm on the 1 minute already, but anyway, see if we can get a price structure break. I'll be interested in taking a short. And that's me. So prices are at levels I'm interested in shorting either the ES or the NASDAQ. That's the game plan. Now I'll just have to wait and see what happens next. And if I do see something, I'll let you guys know, see if we can get into a trade and actually show you that.
Nice.
Nice.
All right. Cool. All right, Igor, you want to
Yes, of course.
take us away?
Yes, I will just talking about my problems like a therapy. Yes, this is the nice place for that.
Okay. We're listening. We're listening.
Yes, I'll find that. Okay, I hope that you see my screen right now.
Not yet.
All right.
Okay.
Not yet, no.
Should I try again? Maybe. Sometimes disappear.
There we go. Should come up now. There we go. Awesome.
Excellent. And right now, I will talk a little bit about problems in trading, because usually traders think about support and resistance. And we think, okay, I need to find support area, I need to find resistance area, and I can use some strategy to trade. Some traders use supply and demand zones and trade only based on that. But trading can be a little bit complicated. On the other side, I just want to make some introduction, just to say thank you to all people that are writing books, because a lot of people decide, for example, to show their strategy. It's their unique strategy. They use the names, the new expressions, the new terms. They use similar stuff as other traders, but put couple triggers or filters that nobody uses, something like that. And there are a lot of strategies on the internet right now. And in the last few years, we have SMC, ICT, and a lot of concepts. But all that concepts are actually something that exists in decades. So there's no such new thing there. The only thing that I need to admit, they create new expressions, new terms. Actually, that terms we had before, but we didn't use that kind of term. And the two terms that we use in trading are liquidity sweeps and liquidity grab. So for the beginning, I will find some chart just to show and explain, if somebody just watch right now that, just to show my concerns and everything. I will pick a gold. I will pick a gold chart right now, just to define these two concepts, and that people just understand what I'm talking about. So there are two things. Here I put two yellow zones, one resistance zone and one support zone. Let me assume that these two zones are something that repeats itself last few decades or years or something, some very important levels that repeat itself. Of course, this is gold. We don't have that kind of levels there, because the gold is higher and higher, new highs every single year. And we cannot talking about that like in ranging markets like euro dollar, British pound dollar, but this is only for example. So right now, if you watch the support yellow zone and you see, for example, price touch this zone, we expect that price just react on that zone. But then there is another candle, and that candle is going below this zone. But imagine the moment when that happens, you will have the full candle here, maybe 10, 15 pips, number of pips below, and you're 100% sure that this is the breakout, because a lot of pips below the support. And then you see the wick, and you realize that it was your mistake in trading. This is something that we use expression 10 years ago, like support, rejection, weak rejection, or something like that. But a lot of traders use expression liquidity grab today. And there is there's no problem with this. And this expression and the concept is clear, usually clear. The solution for traders is put a wider stop loss. Try to put maybe 10 pips below your low, and you will be protected in some way. Or check the volatility, see what is the average volatility, and maybe add 1 hour average volatility below or something like that, and you will be protected. So there is a way to be protected. But if we go right now on the upper side, on the resistance here with follow zone, and this is some kind of the problem here. The problem is because we have here, this is the example of a liquidity sweep. And by definition, liquidity sweep zone is a price area where stop loss orders and pending orders are targeted to trigger it, and often causing a quick volatile price movement. And these zones are used by institutional banks, experienced traders in hedge funds or something like that. And the name is because of liquidity, buy sell orders waiting in the market, and sweep because it's a move that clears out orders. But if you watch right now the example that I show on the chart, you can see one very interesting thing related to the liquidity sweeps. On this chart, liquidity sweep is above resistance zone. So above resistance zone, it's not in the zone, it's above. And of course, liquidity sweep in the support, it's below support zones. And this is the problem. So there is just steps that we can see. So market forms a visible resistance, price spikes above the resistance, stop loss and buy stops get hit, smart money fills, they make sell orders, and price reverse down. And this is the same thing is if we have a liquidity sweep on support. Market ranges are forms of support, price breaks below support, stop losses and sell stop loss are triggered, big orders are filled, and then we have a quickly reverse back up. So this is the theory of the liquidity sweep and the liquidity grab. And of course there are a lot of pending orders there, and these liquidity sweeps combined with all these trades and pending orders, all these things happens because of that. But now I will back again, what is the problem for our traders? This zone that we have liquidity sweep, this zone can be sometimes very huge. When I said very huge, can be quarter daily average range. And this is disaster for traders because sometimes we will lose our trades because of that. And now I will just back just to see that zones from British pound dollar right now. I will just a little bit, find maybe on the different chart, maybe this chart, or we will see. I don't know which is worse. Maybe I think this chart is better because there's less things on the chart. So what is the problem here? I will remove this object, this Fibonacci levels, just not to confuse people that watch. Okay, I did it. So first thing that we have here some area that's interesting for British pound dollar. I will just like this. Okay, is this zone here? I need to. Okay, this is my mistake. It's a little bit hard to draw the rectangle on the levels that you want on this platform. This is the biggest problem here. Maybe I will have more luck right now if I do like this. Yes. So this should be the support area if we little bit think about British pound dollar. In the moment when we watch the price around 1.2850, we can see that support area here. But the problem is that we have another support area, and that support area is somewhere here, another zone. And if you watch all this yellow area right now is one I need to say that crazy zone, because you cannot find your stop loss easily here, because all these areas were previous support, previous resistance areas, and vice versa several times. and you see that all that prices, there is some rules there. There is some moments that repeat itself all the time, and this is the problem. The same thing I talk about the area I think that we cannot see on this chart right now. But for example, this is the support for the British pound dollar. Actually, this area should be from 1.2705 to 1.2750. Some 10 pips is support zone. But the problem is that we have another zone below that around 15 pips to the 1.2690. And this is that liquidity sweep zone that you think, oh, there is a breakout below 1.27, I'm short. You make short trade, and you just in a couple minutes or you 115 candles, you will see how price reject and start to go up again, and you're losing money, and you don't know why you're losing money. So this is the something that I watch every single time, and you can detect that because in these markets like British pound dollar, euro dollar, because all that price levels and zones repeats itself because we are in raging market from 2016. So we're in these price levels last 10 years, and we don't have problem with the price levels and the strong supports, resistance. I can close my eyes and I will know exactly where I can see some kind of price rejection or a important price level or something, because it repeats itself. But the problem is when you have two support zones and two resistance zones, very wide zones, and the only thing in that moment when you be in that position is to create a larger stop loss order, 40 pips if you need, and to reduce your position size and to trade, because there is no way that you can know what market can do. And this is the moment that's really, really tough for trading. So right now, for example, what I want to see here is that price reach again this 1.207015 zone, something like that, to enter into the trade, and of course to put at least 30 pips stop loss, and to try to achieve my previous stop loss. It's 1.2790. So it was here. This is the zone that I lost on my video previously. Now it should be resistance if we go down. And this is the only strategy that I can use. And the one good thing is for this trade that I monitor still now is relative strength index trend line that give me some kind of the bias, because it's almost 45 degrees right now, or maybe a few degrees up or down. But we can see it's a really steady bearish move on the oscillator. If we see some moment that we break this trend line, easily we can go in the bullish area again, and everything will change. But the problem is either for bearish, either for bullish trade, to find good stop loss level now, because the market is really, really volatile. It's so tricky to find good level. I know maybe 1.8850 and 1.27 right now. Okay, this good stop loss zones, but 150 pips far away, and it's a dangerous to have so big distance between that zones. And this is the problem that I'm fighting right now. But I just wanted to share with you and with all people, just to think about that sometimes you need to calculate two support zones and two resistance zones on the chart if you want to be clear and protected if you are day trader as me or intraday trader.
Awesome.
So this is my therapy.
Awesome stuff. I'm trying to just get to my charts here. I don't know what's going on with my account. I took a trade while you were talking, by the way.
Oh,
Wow.
nice.
So
Can you
I'm
share?
about almost $400 in profit now that I freaking, what's his name, moved something around. That's gone. Let me see if I can bring it back quick.
Excellent. I like happy stories.
Yeah.
Yeah, I've lost all of my drawings and everything. But anyway, I've already booked a little bit of profit as well. I'll quickly show that trade, and then hopefully we can get a continuation lower. Present. It should pop up now. Where are we? There we go. All right, NASDAQ 100. Remember I told you we were around here. Remember now I lost all my drawings. No idea why. Price did make a new high. Moved lower. I marked that. Remember there was a level here that I wanted to be broken. Liquidity sweep. And then this was then my new price structure break point. What happened? There was a beautiful fair value gap. Let me just open this up a little bit more. Right there. Had its well awaiting let's sell limit order. Price moved into it. Got short with 4 lots. I'm only short with 2 now. Already took profit. My stop loss in this case I didn't put above that high. There's another technique you can use where for stop loss placement is just to place your stop loss above the first candle that forms part of that fair value gap formation, which would be this candle here. So that's where my original stop loss was. And then I took a 1-to-1. 2 off at a 1-to-1. So I got short run about there. Sorry guys, I'm trying to just draw things here because I lost almost everything and got out on this candle. Price hit a 1-to-1, then reduced basically my stop loss to break even or slightly above this candle high here. Now we're making a move back. This might have just been corrective in nature, but I already took some profit and the current open position is sitting around $240, $245, $250. So yeah, that was a trade. I'm actually a little bit confused of what's going on with the platform here at the moment since I lost all my drawings. I had to refresh it and yeah, might just close out of this trade and just get flat since I don't know what's going on and I don't want to turn a profitable trade into a losing trade either. But that was the setup, guys. Pretty simple. Exactly what I look for. So you got that sweep of it high. The price structure at that stage when I was talking about this trade was just way too low down. By the time price would have reached that, where do you place your stop? If you place it above a swing high, that could be potentially quite far away. So I either wanted that 1, 2, 3 type of move. We get a lower low, lower high, confirmed lower high after a break of it first move lower, which we didn't get. But price then moved higher again, pipped that high, break price structure, BOS, a break of structure point with a fair value gap, price pulled into it, actual resistance, and we had a nice movement lower. Cool. And that's it. Nandan, you have anything to show us?
Yeah, I kind of don't feel like I explained my previous 2 or my trade that well, so I guess if I can share my screen.
Yeah, please do.
Wanted to go back into those entries and kind of talk a little, touch on some things I think I missed.
Cool. I'll take my screen off there. And on my side, try to figure out what's going on with my platform here.
All right. Hopefully you can see my screen.
There we go.
Okay. Yeah. So, like I said earlier, for this pound Aussie trade that I took earlier today, I was pretty late into this move. The heat map percentages were pretty high. They're already over 1% when I took these trades. So I took 2 trades. These red arrows are where I actually entered. The first point of entry, this first red arrow where I entered, the momentum was carrying it downward. You can see it's just continuously moving down. I'm currently on a 1 minute chart. So when I entered this pair, it immediately went into about 35 pips in profit. I got my stop to break even, hoping this pair could cleanly break, or let me get rid of these little lines now. It broke this support level this little range we were in. So again, Igor mentioned about how support levels aren't always the best indicator or the best only thing to use in your trading, but it certainly does help. And when we broke this, I was certainly interested in a trade. We broke that area of support and broke that range ultimately, and we did have confirmation on the heat map. So money is on my side. Now, the only problem is I'm way too late into this move. So when I entered in the very first time, let me put my trade history back on. Okay, when I put my trade on, I definitely did go in with a scaled back position size. I got my stop to break even, in the first like 5 minutes. Unfortunately, this pair did end up stopping me out. And then I started. I saw it started to consolidate on the 1 minute, for a couple minutes, and at that point I was thinking, okay, I have a potential for a re-entry here. If I was to enter, when I entered in my second uh, position here, the second red arrow, I put my stop loss right above the 1 minute consolidation. In my mind, it's either gonna continue downward and continue with the momentum, or it's going to completely reverse off it. And at that point, the market got the best of me today. That was pretty much my thinking with the initial stop placement on my second position. So because the stop is about 15 pips, I was able to go a little bit more aggressive with my second position. My initial stop on my first position, my stop loss was a little wider. It was a lot wider actually. It was about 65 pips, which, I'm not waiting to get stopped out. It's just in case there's such a random move, I'm okay with it going to that level. But I'm usually out of a trade within the first 5 or 10 minutes. I'm not allowing it. I'm not managing a losing position ever. I'm either in profit and with my stop to break even, or if I see any type of reversal at all happening, I'm out immediately. So stop losses for me are not really something I want to be hit ever. I'm just having them in place just as a safety guard, just in case of some random unbeknownst news event or catalyst that I wasn't expecting. So on my second entry for a sell, I put my stop loss at a pretty tight 15 pips. I was waiting for this pair to react with this low that it made. In my initial entry, when it pushed down, it pulled back. I wanted to see how would the market react when it reached that low again. And that's when we started consolidating. That's when I was thinking, there's multiple things going on here. One, I'm extremely late to this move. So what I said earlier plays into here, where the later you are into the movement, the more unstable those movements become.
Mm.
And keeping that in mind, I started to see that we did not have enough juice to break that previous low we made on the 1 minute chart. And because of that, I got too skittish and I ended up exiting my position. Now, this position, I took profit, or I exited with about 25 pips of profit, but ultimately, I could have, if I go to the 4 hour, my goal was to reach about 2.103, I'll call it, right? This pretty much this low over here on the 4 hour or 1 hour and 4 hour chart. But in my second position when I entered, if I just kept my position in, we could have made about 100 pips today. We could have definitely scaled out later and held on to the lots a little more. I still believed in the 4 hour uh, potential, the range, but the market just got the best of me 2 times. So at that point, I'm not really looking to enter in anymore. I got too scared. At that point, I'm way too late. If it continues, it continues. If it doesn't, that's all right as well. But I didn't enter in again, even though it started to continue down past there. But I was happy with the 25 pips in profit. You know, you really got to manage your expectations when you're really late and deep into a move like this. So it wasn't really anything. You know, even if it was a loss, you know, it's not a loss, but even if it was a loss, I would consider this as not a major L that I took. You know, it's not a major nothing major happened because one, I'm late in the move and I've scaled back so significantly. It doesn't even matter. It's just I'm just doing it for fun at this point. You know, I'm not really looking for an extreme profit margin in this. I was initially when I entered, I was looking for that, but I got too freaked out when the market reacted the way it did. So my plan would have fallen through, but due to my poor execution, you know, I paid the price, to say the least. So I think that gives a little bit better picture of where my head was at and why I entered in, and why I exited. And yeah, I'm hoping that that would clear up any potential questions anyone might have had, or confusion anyone might have had as to why did I exit and why did I enter. And I guess the last piece of thing I'll add to this whole talk is I only try to enter into a trade 2 times max, and if I have a trade idea, I give it 2 chances. If it doesn't work out, I don't. I look the other way, close the computer, and just walk away. You know, after 2 chances, I think at that point I'm letting my emotions take control, and if you can't hit a trade within 2 chances, the market got the best of you, and it's better to save your money for another day.
Agree.
Yeah, that's pretty much all I wanted to add to that trade that I took today. Unfortunately, didn't play out as I hoped, but that's all right.
It will be better. Yes.
Yeah. You know, it's crazy because last week you have insane moves, and you know I got in front of the computer at the perfect time. I got a really well profitable trade, but today, you know, same execution and completely opposite result. You know, it just it didn't go out the same way as it did on Friday for me. So
Yes.
Sorry, guys, I'm listening here, but there's something glitching on my platform, so I had to close that trade out. But at least not too bad profit there.
Just to add a few things, guys, just to show something, if you don't mind.
Yep.
I will just to show a few things.
Hello, Anonymous, and Hola Prime is talking to us as well. Sorry, Igor.
Okay. I will just show one thing related to the COT report right now, because I didn't watch last 10 days, I think. Just for traders that watch right now this session, the COT report is a powerful tool for Forex traders, of course, because you can understand what the big players, institutions, and hedge funds are doing in the futures market. Even that we're trading CFD market, there's no problem because the prices are correlated, the same price in futures market and CFDs market. So in this way, we can see what big players are doing right now. And it's very similar to the Nandan's heat maps, just in this case for longer term weeks and months. And sometimes it's good to have that kind of the bias. So in this COT report, as you can see, we have a free lines. There are commercial hedgers that are big businesses that using futures to hedge real world risk. Then we have non-commercials or large speculators. That's hedge funds, big money traders. They trade for profit, not for hedging, and they drive the trend. So we watch them the most, large speculators. And the small speculators, they're usually wrong at turning points. So retail traders, they're usually there, but I just want to show you something that's very interesting here. And this is something that I'm very optimistic lately. So first, this red line on the COT report, they're retail traders. And what I see on several futures charts in last couple months, I need to say, is that retail traders are a little bit better because their positions are very, very aligned with speculators and hedgers and everyone. So this is the something I can tell in a good way that happens in the market. So I think that retail traders improve themselves a little bit in that way of the trading. The next thing what you want to show is that British pound dollar is as usually not good shape. So this is the proof that we are around the pivot point. Pivot point is around 1.27. We're very near to that level. And if we go to the chart and see, for example, the lowest low in the January and the highest high just from the last week, we can see that we are in the middle. Even that looks a little bit different, but we are somewhere in the middle there. And we're 500 pips from the low and the 500 pips from the high, and this is the reason why this chart is somewhere nowhere or something like that. But Nandan's he told a lot of things about Swiss, and I just want to show something interesting there. We can see the huge difference between the large speculators on one side and with the commercials on the other side. And this is the good thing because right now we can see that the large speculators are more or less 2 weeks short, which we can see on the chart because they move the trend. And this can be sometimes interesting just for the risk reward perspective, which means even we see this, it's not smart to make a big short sell order right now in long position way of trading, because we cannot have good risk reward ratio. So this kind of the strategy maybe can be to wait to see some huge spike upside and maybe to go long here. Even right now, the Swiss is very strong and pull the US dollar Swiss down. But I think that some good news related to the Swiss. Wrong, actually, we need to see the bad news for the Swiss or the good news for the Swiss, and the market to reject that news. So I would like to see that maybe for some longer position, because we are really on the big support here, really on the big support, and risk reward ratio is not good right now because we are really in the market that there is a huge difference between the large speculators and the hedgers. So I just wanted to share this knowledge with you. But surprisingly, look this, the red line and the green line. See how retail traders are like large speculators, which means that traders that trade US dollar Swiss, we cannot call them the ordinary retail traders. They are good traders. They're in the trend. I think that maybe many of them have longer swing trades, maybe positional trades here, and this is why this red line is as same as large speculators. And I think that this is the good sign, and this is the good sign sometimes for reversal. But maybe next time I can talk theoretically about that more. But this is just a good way to enter long, to have a good risk reward ratio. Only that. Even without cut report, we can make conclusion about that. But this just give additional trigger to traders.
Cool. Thanks, Igor.
Nice.
Yes, I just wanted to show that.
You too, guys. There's also a question around the Australian dollar Swiss franc pair. I don't know if you can see that in the comment section.
Yeah, Anonymous asked, simple question, can I enter as a buy position in the Aussie Swiss, although it's counter trend? Don't need financial advice, but you'd like to know the perspective. Okay.
Good.
Yeah, I can definitely go into that first and give you my take, and then for sure Igor can give you his take on that. Let me present my screen. Okay, Aussie Swiss.
There we go.
So the Aussie Swiss, yeah, you're saying it's in a counter trend trade if you were to buy it. That is definitely true. Whether it's a good idea or not, that depends on you. What's your appetite? What are you looking for? If you're just looking for a simple day trade, I think you definitely had a potential today to do that. But again, when you're counter trend and you have these major moves, it's in a cluster right now. So on the 1 hour time frame, you could definitely say you have a resistance point at 0.51, and you can potentially move back up 80 pips. But I don't know what you're looking for exactly in terms of how many pips you want. Just keep in mind your counter trend. So manage your expectations on how long you're going to be in the position. Manage your expectations on how much you're going to be risking, because again, the Swissy is still strong against every currency on the larger time frames. And I believe, if I check the heat map, if I'm not wrong, I think we might have had some Swissy strength. No, actually, Swissy was more so neutral today. We have some Swissy pairs going up and some Swissy pairs going down. So the main driver of today's movement would have definitely been the Aussie dollar strength. So you could have made pips on it. Would I hold it long term? Absolutely not. I wouldn't. Not yet. I'm not convinced this Aussie Swiss trend is going to switch gears. So um, it depends on what you're looking at. Short-term day trade, I think that's fine. I think right now, if you try to trade, though, you're too late. One, the Aussie pairs have already made significant moves, and two, you're not in the main session anymore. Take your trades in the main session. Understand when the New York Stock Exchange opens. For me, it's 6:30 in the morning. And for me, it's a 5 hour period of time where I'm looking at trades. That's where 95% of my trades are taken. It's in that 5 hour period. So it's 4 hours before and 1 hour after the New York Stock Exchange. So we're past that, or we just finished from that 5 hour period of window. So the liquidity and volatility is lower. So, if you're expecting a 50 pip move all of a sudden, I certainly would not expect that, especially not right now. When you're late into the move and you are counter trend and, this pair has a lot of junk. It's just consolidating. Look at this 1 hour. It's going completely sideways. So you're going to have
Yeah.
you're going to have a higher chance of random movements occurring. They're not going to be stable and secure, which is what you want as a trader.
Yes.
Cool stuff.
Igor, if you had
Yes,
something.
I agree completely with Nandan, and I will just show my chart to justify that. You can see, I think everything that Nandan said, we can see on the 30-minute chart, for example. I will show you just now. So, what is the major problem here? If you go to daily chart, you can see, okay, there is some push. We're oversold. Maybe it's a good time to buy. And then you see that on 1 hour chart, if you see the price, how it's going, okay, up, a little bit down, a little bit up. Okay, I can see maybe a trend line here. Okay, there is a trend line here. Okay, this can be bullish. But this can be a huge problem because on 1 hour chart and 4 hour chart, you can see the bullish divergence. But the problem is this bullish divergence is that there is no clear signal that we are bullish yet. And one of the proofs that I use in my personal way of trading is relative strength index indicator trend line. So look this. This is the price when the Aussie Swiss was highest. And this is the beginning of my trend line. And we had few spikes there. And I have 1, 2, 3, 4, almost five dots that connect this trend line. So this trend line, I can say, is really, really strong, in my opinion, based on some strategies that I use. And we didn't break this trend line. We're below this trend line yet. So the most important thing for me is I want to see this trend line to be broken. And I want to retest that trend line to see how that will react. And maybe after that, maybe I will think to make a buy order. But meanwhile, I will never do that just because this can be a false breakout. This can be really false signal to make a sell order, and then everything can be problematic after that. And as you can see, the pivot point area, we are right now below pivot point area. So we didn't break this pivot point area. So we are below. The relative strength index is against us. It's bearish. And of course, on daily chart, we are still bearish. So all triggers that I have just point me that this trade is not good for buying yet. Of course, you can buy and you can make a profit. It's not problem. But for me, I like to have an edge and to be a little bit with additional triggers, to be a little bit sure. And even that, if you decide to make a buy order, you will probably put your stop loss just below this low here. And it's a 50 pips if I see right now. And you can try positional trade, but it's really a gambling trade because you don't have any additional trigger that is in your favor. So this is the real problem. Sometimes you will pass, sometimes you will fail. But I think that you should wait for some better setup, somewhere where you have a more triggers and better opportunities than this one.
For sure.
Nicely said.
Right, guys, we've got about 4 minutes left. To our viewers, if there's any more questions, please hit them up there.
Yes.
Let us know.
Yeah, you want to put the odds in your favor every time as a trader. You know, being in the right time in front of the computer. You can trade at other times of the day, but once you get past that main 5-hour period window, you'll see yourself, you know, the market starts to slow down significantly. So larger moves, your risk to reward goes down. You know, why would you want to trade something when the liquidity, or sorry, the movements aren't going to be as big? They're going to be less stable. You're putting the odds against you at that point. So, you know, if you were to trade it, I think you could have traded it earlier today, but as of right now, I don't think it's a great idea. But you can certainly try it. I just strongly, I wouldn't do it if I was in your position.
Well said. Well said. Yeah, guys, I'm out of that trade. There's still like an order that shows up here on my platform, although there's no active orders. So I probably need to log out and log in again anyway. But I had a nice quick little scalp trade there for just under $300, it turned out. But not too bad.
Nice.
Excellent.
Yeah, does anybody else have any more? If anybody else has any more questions, you know, of course, put them in.
Yeah, please ask, guys. Please ask. I'm logging out and in again on my side, so I can't show my platform at the moment.
Yes, I just want to share, meanwhile, just 1 minute to share the end of this British pound dollar, just because this question about a trader right now for Aussie Swiss is inspiration for this, and it's a right now the point for British pound dollar. So there is some kind of the resistance support trend line for a British pound dollar. And as you can see, there is a rejection week right now. Maybe it will be above this trend line, but this will not be enough for me to enter long. Even it's a good position in some way, but it's because I need additional triggers. And even the time on support line, it's not enough. And like I said, I like to add, for example, a relative strength index indicator on the chart. In that way, I can draw the trend line, and after that trend line, I can, for example, decide what I will do. But if I go on a chart and draw a trend line here, we're still bearish. Look, we're still bearish. This is the bearish move, and for now, I will not enter in this trade. Even I'm some kind of support right now because I don't know what will happen here. This can go down 50 pips more. I don't know. So this is the problem of trading. Just I wanted to share that this situation with Aussie Swiss we have every single day.
Right.
Awesome. Yeah, thanks, Igor, Nandan. Anonymous, hopefully that helped you out there. And we've also reached the end of our session, I believe. Yeah.
Yes.
That was a good one. Thanks very much, guys. Some informative stuff there from you, Igor, and your horrible day that you had as well from Nandan. So awesome stuff. Yeah. So yeah, I'm back again tomorrow. Don't know about you guys. When you're on again tomorrow morning,
I believe
later.
on Friday I'm back.
Friday again. Okay, cool. No,
Yeah.
I'm not on Friday. I've got something to do. But yeah.
Excellent.
All right. Well,
Thanks so much.
thank you guys.
Okay.
And to all our viewers, also, thank you very much.
I wish you a
And,
great day today.
Yeah, have a great rest of your day. Until next
Yep.
time, take care. Bye-bye.
Bye-bye.
Bye.
Hey, Paul.
Hi, Howard. How's it going? Good to see you.
You too. All good, mate. All good. Hey, Jannie.
Paul, Howard, how's it going, guys?
Yeah, very good. Very good. Enjoying the volatility.
Enjoying the volatility. Yeah, for sure. There was actually a little bit for the first time for me, something on the pound US dollar. We did get that retracement. I'm hoping Andre is watching because that's actually a trade we discussed or potential level of interest that we discussed yesterday in this session. So I don't know if you want me to show it to you.
Go for
Let me
it.
show it to you. Yeah? You ready? You ready? Get your
I'm ready
notepads out.
We're ready for this.
So it, yeah, I think, okay, let me just share the screen and then start to just talk you through it. Can you see it? No, wait. There we go. So the level that we identified, I think Andre mentioned at 1.284, and I think I just mentioned the 1.286 level, which is a much better resistance area. So that did work and played out pretty well. Long out of this trade, and I'll show you exactly where. You see this level, yeah? Do you see that level there, ladies and gentlemen? Yeah?
Certainly do.
That's the level. And the reason why I didn't want to go to the bottom of that range is because I know it looks very bearish, but at the same time, if you zoom out, we did come off a pretty solid or very strong support level. So there's no real, for me, it would be great to get your input on this as well. Because I know you like your Elliott wave theory, so it'd be very interesting to get your views on this. But the way I see it here is like we did make, we are making higher lows. And obviously this day here, this extremely strong sell-off that actually continued for the day after as well. And we eventually got to this level here and then a bounce back up here. Now, yesterday there was an opportunity to go long. I was not interested because of the risk-reward ratio. You know, maybe you can argue, yeah, you can enter here on the 15-minute, but you know, I like to look at multiple time frames, and it just wasn't on for me. The short made more sense in the short term. But now, I think we're now kind of stuck between this range here until we can either break out of the support level, because if we do break out of the support level, then we will have lower highs and also lower lows. So that would the picture will become a little bit more clear. But right now, I think that was a good opportunity right there at that resistance level, that 1.286 level. But I don't think the same for when it goes back to the support level. I don't think it's necessarily a good opportunity to buy there, you know, because I do see this as a strong support area. But if it comes right back down, maybe even pierce through, I'd be a little bit nervous Nelly. You know, when I trade, I'm always feeling I'm on eggshells. You know, like anything can happen here, especially when the levels are pretty close. So what's your take on that, or shall we wait until it's your turn?
Just to quickly sort of, I think sterling has decoupled from euro dollar. You've seen a big rally in euro against the sterling, a decline in the sterling against most things. So the euro dollar has not seen the same decline as cable has done. So it looks like we're in a kind of I mean, I'll come to it when I do my stuff, but literally that run up to the high marked that fifth wave I was looking for, and now we're just in that we're in a corrective phase of that whole move up from, what is it, 121. So it's kind of, we're in a chop phase at the moment. So I'm a little bit agnostic as to directional bias on this thing now.
Yeah. I'm exactly the same boat. Yeah, we need more price action. I said that on yesterday and the day before, Monday and Tuesday. But you know, this is definitely more clear. Okay, you hitting that resistance level, but it's not a long-term trade. It's not a long-term trade. You in this range, but there was certainly, because of the size of the ATR currently, it's definitely slowed down. I mean, the previous 2 days, or before today, I think we had like it just moved like 100 pips, like nothing, like it was nothing. Like even this move here, like from 1.286 to 1.28, which is around this area. Yeah, I mean that's 60 pips. which is pretty. I think today we already saw 100 pips. Let's just have a look. Yeah, 112, 113 pips. So it's definitely bigger than usual, that's for sure. And we've had that for a number of days now. But in terms of the actual technical analysis, I agree with you. We kind of now in this range. So it's not really, even when it comes down to this support level here, would that be an area for you to get interested in along, or would you leave that alone as well?
Yeah, I think there is a kind of if, for example, if euro dollar just continues to go sideways, which it looks like it's doing, cable could make new lows. It's literally it's in a larger corrective phase, whereas euro dollar is in a kind of just a sideways, no real directional bias on euro dollar. So have you seen a chart of euro against euro pound? There's a massive upside break on that.
The euro pound is a horrible chart, and you don't trade
it is.
Oh, it's one of the worst ones.
But it's nice when you get it literally based at the support. Yeah.
So
on a big chart, it based at support, a long-term chart. Try like a weekly.
Yeah, this is the weekly. It's like, okay, so the sterling is suffering against the euro.
Yeah,
like quite significantly. What do you think that's based on? It's like tariffs. No, don't know. We don't care, do we? We just trade.
I know, because not so much. Bottom of the range, basing at the bottom of the long-term range, I suppose.
That's true.
It to me, it just means that if euro dollar is just going sideways, then cable can fall. So there's a bit more downside.
You can't just forget about the dollar. What do you think the dollar is doing?
Dollar's going a little bit sideways before it breaks down again.
Yeah, because I think the dollar is like, this is the weekly chart. We spoke about this just briefly last week, Paul. I think we were in the same session. And we had that break on the 4 hour. Obviously, the dollar index is something we just like briefly scan over, and we use it as an indicator. We don't trade it, but we had this the break, and then we had that retest, and now we're coming back down again. So, do you understand what I mean? So, I'm trying to figure out. I mean, it's not always possible when you look at the chart, but if the dollar is weakening and the sterling is also weakening, kind of like is it like we need to, like, one of them has to be stronger. Like, do you have a way to measure that? Because I just look at technical analysis, but is there a way you look at that, or not really?
Not so much. No, I'll just look at all the dollar pairs individually, and dollar and looks to be pretty nasty as well. A lot of them. I think the commodity ones, they're kind of the other way around, like the Aussie and the Kiwi, they're the other way around. Whereas CAD looks weak, so the dollar looks weak against the Canadian. So I think on balance, the US dollar is headed down, but we're in a bit of a phase now where sterling is not going to go down, it's not going to rise quite as fast against the dollar as the other ones do.
Yeah, they're both weak then. Yeah. Well, anyway, so I think just based on that, you can just go by the technicals, I think. And at the moment, I think we can agree that this is not really a good area to look for any trading opportunities. We want to get a bit more price action. If we can break that, make a lower low, and maybe a retest of that level to go even lower. And then I've got this level marked as the next level of support, which is around 1.255. This is on the pound US dollar.
Yeah,
that's the next level, because it's a pretty strong support level bouncing up there. You can see this level has been respected a number of times. But for now, we're going to have to, I feel anyway, for me, I just want to see what happens from this point before putting the finger on the trigger. Right. So that's the pound US dollar. Is there anything you want to add? What do you think about this?
I think either one of those.
I think the most qualified people are talking about it.
Okay. All right, but I mean the patterns are the patterns play out very similarly. Maybe not on Bitcoin. Bitcoin is an untamed beast. But okay, so that's the pound US dollar. The NASDAQ. I actually watched you last night, Howard. Not in a weird way, just to get your kind of views. Just to get your views.
Do you live in the same country?
No, no. But it's like I was like skipping through the past because I was trying to get my people's opinions on Bitcoin specifically. It's very interesting. Bitcoin is a very interesting talking point, and I know you have a very strong view on Bitcoin to go lower. So we can talk a lot about that. But that's Paul's baby, and then we can all interrupt him as much as we possibly can.
Sounds good.
The NASDAQ. The NASDAQ I am struggling with to trade. And it's mainly because of the ATR. I think I mentioned yesterday about a trade that I missed while we were in the middle of a conversation. And then in hindsight, when I looked at it, I would have lost that trade because of the ATR. So I can't really do too much. The only way I can trade the NASDAQ is if I trade it on CFDs, because the smallest you can possibly trade on futures. Just to be clear, some people think the NASDAQ is automatically futures. No, the NASDAQ's the NASDAQ. You can trade the NASDAQ on futures. You can also trade the NASDAQ on CFDs. But on the future side of things, you can't trade smaller than 1 micro. Right? That's the smallest you can trade, which is pretty big, by the way. So in terms of risk, like I've actually a place that you can see I'm on a simulated account now, just to like check how far the take profit is from the stop loss. And usually when I place a trade, now first of all, I have these bracket orders. So I put in 100 tick, which is 25 points. If you don't know what a point is, it's basically everything above that little dot. Those are the full points. And then on the right-hand side, you get your ticks. So they go in increments of 0.25. There are 4 ticks and 1 full point. Okay, so 100 ticks is 25 points. So I have bracket orders. So the moment I enter a trade, my take profit and stop loss is already preset to 100 ticks on both ends. That usually gives me a lot of room to take my stop loss and move it up to a place where it makes sense on the chart. I don't just leave it there static. I move it. There's room to maneuver. And then the take profit, I try to move further away, and that gives me always a positive risk reward ratio. I can't do that. I can't do that now, okay, because of the ATR. So if I place a trade now, then the stop loss is less than 1 candle, because the 1 candle is like, it's not uncommon. I'll show you one. I actually tried to. I did have it ready for this session, and then obviously what date is it? It's the 9th. So let's have a look at, was it the 7th? Well, it doesn't really matter, does it? We can just have a look. Say over here. Say over here. This is the 1 minute time frame, okay? So if you look at this candle here, for example, I just want to drive that point home. So 1 point. Oh my goodness, man! This is the pound US dollar. Okay, when I saw 1.2, I just knew. All right, let me just see. Sorry about this. You're going to hear my mouse in the background. I'll sing you a song while you wait. What would you guys like to hear? Okay, yeah. So if you look at, say, this candle here, this is the 1 minute chart. This is the 1 minute chart. What is the difference there? This is, if you can't see, this is 17,110, and the high there is 17,406. That's 300 points.
300 points, yeah.
300 points on the 1 minute time frame. It is. Oh my God! Let me quickly show you. Just like so, if you're not, oh, I don't need a calculator for that. Okay, because 1 point is $20 on one contract. So 1 point is $20. 300 points. Okay, that's $6,000 on one contract, one mini. Now, this is obviously, if it works in your favor, it can very easily go in the opposite direction, right? It's just, the ATR is ridiculous. So you can trade, so that's $600. Sorry, $6,000. That's with one mini contract. The smallest, as I said, you can trade is 1 micro. So that's divided by 10. There are 10 micros in one mini contract. So 1 micro, so is this risk, what is that? That's equal to $600. Okay, now just to put this into perspective, if you are trading with a prop firm, now Holoprime will soon have futures products. But if you're trading with the prop firm on, say, a $50,000 account, your drawdown would typically be $2,500. So on the smallest trade size you can possibly place, you're taking this is a 600, let's say this, you saw this top here and you reckon it's going to go down. Very, very quickly, you're down $600 on the smallest trade you can possibly trade. So can you see why it's so dangerous right now to trade futures? Now on CFDs would probably make more sense now because you can control your risk much better. Okay, you trade in lots, not in contracts. So the scalping for me on NASDAQ for now, I've put on ice. I've put that on ice, so I'm going to have to focus on the pound and Bitcoin a little bit more until we can get some sort of I don't know, until it can return to normal levels. I mean, that could be months. I don't know. Like, we're just going to have to monitor it and keep an eye on that. Does that make sense? By the way, you have any questions on that?
Yeah. Futures, you're very much constrained, aren't you? You're limited to the ticks, the contract sizes, aren't you?
Yeah. So the risk is definitely the risk. It doesn't make sense unless you have a much bigger account, like say, I don't know, a $250,000 account. And even when you have a account of that size, you're going to have to trade really small to make sure that you still trade within your risk parameters. In other words, the maximum risk you're willing to take on a trade and so on. Okay, so that's the NASDAQ. But on, I mean, I drew these really ridiculous levels. I think I still, I've put this line over here. I think it's not completely unrealistic for the NASDAQ to drop all the way down to 11,000, maybe slightly lower, which is 50% from its highest point over time. Not maybe in a straight line, but that's definitely on the cards. I feel that there's a lot of chaos. It's not just tariffs. It's all the things that spiraled out of control over a long time, like debt and so on, which is so the US has been in trouble for some time now. And I watched a video on Ray Dalio, big fan of Ray Dalio. I highly recommend you watch his work. And he understands what the US government is trying to do. He's just very, very concerned about the way they're going about doing it. But aside from that, he says that they're in trouble anyway. So watch his work to find out more about that, because I'm just going to parrot something and I'm going to leave out a lot of important, valuable information. Yeah. So, but on the daily time frame on the NASDAQ, we're still trading. I don't know why I've got two lines here again. Oh man. Anyway, I'm going to get rid of this one. Why not? Close enough, right? So at the support level, and then yesterday we had that big reversal, and so we're finding a bit of a range here on that support level. This is a pretty steep drop. I don't know really what to expect from here. Is it going to pull back? Maybe. I really don't know, but I do expect this to move much lower this year, definitely this year. Okay, and then this is the favorite one. This is our favorite pair in this session, and that's the Bitcoin. Bitcoin hasn't really done much apart from it went down to retest this low that it made yesterday, and now we're in this range. The context, I think, is definitely still bearish, but downtrend, all of that. But as I said yesterday, Howard, you were not in the session, so I'll just repeat that one point. I'm in full agreement with the downtrend and so on. I'm very wary of the fact that we just bounced off that very, very significant support area. So for me, I'm neutral for now until it just needs to move away. Do what you want to do. And I think a lot of people will get slaughtered in that area. But if a little bit of patience just to get a clear picture, I think will pay dividends. And Paul just disappeared when I said that. Oh, he's back. Okay, so yeah. Anyway, that's a brief summary of everything we looked at. But yeah, I think Bitcoin. I think the probability it does exist for this to turn around for sure. But the argument is equally as strong for the opposite to happen. But I do feel it will be a very big mistake to just ignore this very strong support level. So it's kind of that critical area. So we'll see. But Paul, what you said on Monday about take shorts, I think that was good advice because that was definitely the case as long as it was short term. Yeah, for sure. But I don't know how you feel about that now. But in terms of risk on or risk off, but for me,
Well, when I talk about
neutral.
When I talk about shorts, I talk about shorts as in the entire cryptocurrency market.
Oh,
Bitcoin,
okay.
yeah. So I mean, I suppose I'm in the habit of trying to communicate, our mindset based on just what we're seeing in the TA, which of course we're in a downtrend, and
Yeah.
we've obviously, so. But when we're talking about most crypto traders, right, the cryptocurrency market, if Bitcoin is in a downtrend and Bitcoin is stuck, which it kind of is, it's going to be short trades for the rest of the market. And obviously, if we arrive at that lower level, the big support between 73, 69K, it is a range. If we go down there, then that's a good place. The first place where any potential altcoins which are in a good place for a long-term support, if that still exists for some of them, then that's a great place to long. But until we arrive there, it's either there or we wait until Bitcoin's the other side of the 200 MA. So, so I suppose that is the neutral stance you're talking about. But I just like to put a bit more of a note on it, perhaps, in terms of how we can impact our trades.
Okay, great. Okay, so that is it from me for now, at least. So I'm not sure who wants to take over. Howard, do you want to perhaps share what you have?
Yeah, let's have a right. Okay. So, okay. This is 30-minute chart of euro dollar. The pink is the time of the day from midnight my time, Central European time, to 7 o'clock. So basically the early range. And I've basically been attacking it from the short side over the past few days, just looking for that kind of early European breakout and then a retrace back into the range, and then just looking for it to come back to the other side of the trading range. And it seems to have worked out fairly well. Today, I hit it on the way down. I think it was around just on the break of these two lows here, 110.5, and covered down around these lows here. But yeah, that's really since we made that massive move up to the recent swing high, it's got really volatile. I've just been taking short-term trades, really just within the range, not looking for anything too aggressive one way or the other. So that kind of thing where you I guess you see it a lot in the stock indices as well, where you get a breakout of the opening range and then you come back in and then you test the other side. So that's really what I've been kind of focused on. Nothing really, not looking for any kind of home run trades as I was before this big breakout. So yeah, that's what I've been doing on the short term stuff. Apart from having a crack at crude oil on the way down, because it broke through that massive support level.
Tell us more about that, because I was reading an article about that earlier. I'd be interested to see your take on it.
Yeah, sure. 1 second. Let's just. So there's been a lot of really kind of textbook technical analysis, like the weakness, and we had that kind of descending triangle pattern. I'll just draw the line up there, which was in play for well, pretty much we had this was the invasion, and then the spike in inflation in 2022, a double top and then a breakdown, and then it's basically been in a range since early 2023, but with lower highs all the way along. So rebound, back down, lower high, back down, lower high, and then we've finally got the breakdown, and that's why I think we've seen this massive move lower in crude oil. So yeah, and it's kind of it's in sync with all the other moves, the big ramp up in volatility in the stock market and the currencies finally. So crude has collapsed really, and we're just seeing a bit of sideways chop. Seems to be quite highly correlated with the S&P and the NASDAQ, kind of risk off type stuff, recession fears. Yeah, so that's really what I've been focused on in terms of looking for decent moves of late, because the currencies have not been that they were very boring for a few weeks, and then they got massively exciting and very difficult to jump on. Yeah,
that's interesting.
Yes, I think it's yeah. I mean, this one, it was just for a long period of time, very small. These are weekly ranges. People just getting really bored of it, and all the fundamental events that you would imagine would take this much higher, like all the Middle Eastern stuff, and just the escalation of tensions with Russia, Ukraine, and all the rest of it. But no, every time it went up, didn't stay up. And finally, it started to break. So yeah, it could. This one I think is down to the perhaps 40 area. I don't know if it means lower petrol prices. Yeah, what do they say? What do they say? Up like a rocket and down like a feather when it comes to petrol prices.
Yeah, that's very accurate. Yeah. That's very accurate, actually.
I think yeah, it kind of not looking.
Sorry, you were breaking up. Did you end your? Oh, you ended your sentence. You were breaking up.
Yeah, no, I think just not very good for the macro situation. Just the way this thing is started to break down. I mean, maybe eventually it'll filter through to lower inflation, perhaps, but it's just indicative of things not. Yeah,
but is that because what? Sorry, I can't really see what time frame that is. That the monthly or?
I think that's weekly.
Oh, is it weekly? Okay.
Yeah, so we've been in this kind of range descending triangle thing. You draw the trend line on across the tops, and then finally it went a couple of weeks back.
So how would you?
A lot of big pattern.
Yeah. The weekly did give you that that upper wick. Could you spot an opportunity on the smaller time frames closer to that breakout level, or did it not really come close?
Let's see. I think it like all the other markets, it moved very fast, didn't it, on the daily time frame?
Oh, okay. Right. Yeah, that's always a problem. Hey, Andre, good to see you again, man. Yeah, definitely. It's easy to trade these days. Yeah.
Yeah. He didn't even need to use an emoji. We got the sarcasm.
Yeah. Okay, so that's the smaller time frames. Okay, so what time frame is that now? Sorry, I'm so sorry. I can't really see.
That's a daily. Yeah, daily time frame. So yeah, so you had that, push higher, then a big reversal, and then away we go, boom, 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 like that. So it must have taken out quite a lot of stops on the way down.
Yeah, it didn't really show much of a recovery attempt either.
Yeah, that's the problem. I mean, look at that gap, and then the gap got filled there, and then it continues lower. Oh, it's so difficult to take those trades. So difficult when it's like a straight kind of drop, and you don't get a little bit of structure, maybe a pullback to a decent level, and to present an opportunity. Because those type of trades is like they full on chasing trades. They just if you just have
to remember that obviously this the pattern is a higher time frame pattern. So any return to retest the pattern is going to take maybe a few weeks at least. So I think the chasing might be slow motion. Let's target June.
Tortoise chasing. Tortoise chasing.
Yeah. This is this is one of those ones where just when you think it's headed much lower, you get the you get a 2-week rebound.
Yeah. Just wait for it.
So, well, but did you, was that on your radar? Because I looked prior to that break. Again, that's the date. Yeah, prior to the big move to the downside. Okay, but that was obviously the tariff news that moved that, right? That so again, very difficult. But that you did get to like that resistance area before it reversed. But again, I don't think many people would have had much risk on prior to that to the tariff news release kind of event.
Andre is asking Howard the direction of the dollar with this escalation of tariffs. So what do you think about that?
Yeah, still down. XY there.
Oh, Howard, like you know,
I've not got the,
just when the good stuff comes, like the meat and potatoes of your sentence. Then
we got a few internet connection problems. Don't worry, we can just about hear you.
Yeah. For me, the trend in the dollar index is still down. We're just seeing a bit of a little pullback against the trend. So, and I think it's best represented by the euro dollar actually.
Are you showing a chart or? Oh, sorry.
It's just any second. Here it comes. Yeah, any second now. So flip this one up upside down because this is it's the main constituent of dollar index. So yeah, euro dollar trend up, dollar index trend down. So yeah, we had that fourth wave correction I was looking for. Then we had that big run up to the high, and now we're seeing a bit of two-way action here. Maybe we've seen the low for the pullback, and we see new highs. But overall, I think the dollar is still in a confirmed downtrend. So I wouldn't be in a hurry to be buying the dollar. Although I've been buying it the last few days, but just for little intraday pullbacks. That's the only thing. I wouldn't want to be buying it for multi-day.
Yeah, it's a difficult equation that is about because there's many elements to it. The perception of the dollar, the perception of the country, and I couldn't ever make sense of it. It's just I think we're just going to have to. It's difficult to see it going up though.
Well, the dollar.
Yeah.
I can't see the dollar. I can't see the dollar gaining strength. That's why I was extremely surprised with that big pound US dollar drop. I know the pound is weak, but to move that much against the US dollar in one day after a very big up day the previous day, to wipe it all out the very next day is like what is going on? But if you look at I don't know if you have the pound US dollar there, Howard. Like if you look at
So I missed that last bit. Sorry.
Oh, am I breaking up now?
Do you have the pound US dollar?
Yeah, we're okay now. So say again.
So the do you have the pound US dollar there? Can you
let's
perhaps
yeah, sure. Let's whip that up.
God, the tariffs are so bad; it's affecting Howard's internet bandwidth. Oh.
Okay, that's it, right?
Yeah.
Okay, so
yeah.
So this is one thing I said yesterday because of that distortion that you had there, that massive sell-off. I'm on the 4-hour chart, and if you see that the big move to the upside and then this huge sell-off that I don't think many people anticipated. Now we're hitting that support level. I view that as a potential distortion in the actual structure of the trend, right? Because it was very abnormal, and my bias is actually still long. But there's no trading plan yet because of what we spoke about earlier. Yeah, we just come off a support level. We bounced off the range high, so we're in that now. We could potentially break lower to the 1.255 area, but that to me, my bullish bias would probably be gone by then. So I'm seeing that as I'm trying to keep that in mind. It's like, well, that was very, very unusual, and at the same time, don't lose sight of the bigger picture. Does that make sense?
Yeah.
What's your take on that?
Yeah. For me, I think there's a lot of overhead supply. The way it's broken down quite aggressively here. I think until we can get back above the high for the last couple of days here, I think the bias is going to be to the downside, really. Not in a massive hurry to go long this one. Maybe it just does some kind of sideways chop towards that area.
Sorry, did you say buy? Did you say just press the buy button? Is that what you said?
I heard sideways.
Bye.
Hey, Robert, nice to see you. Nice to see you. You've been killing it. Okay, there's definitely some sarcasm as well. Robert, I'm interested to hear from you because you trade futures. Do you also find that the ATR is a problem? It's very, very difficult to trade on the futures right now. Is that also what you find? Be interesting to hear what you have to say about that. Sorry, Howard. You can carry on. Howard?
So yeah, for me, kind of. Here we go. Okay, yeah, over to you guys.
Oh, okay. Paul, do you want to take over?
Sure. Thanks for that, Howard. That's great. Right. Yeah. Okay. Let's have a look at Bitcoin. See how Bitcoin's doing in terms of volatility. Speaking of which, okay. So this is Bitcoin 12-hour. Can we see this chart? Okay.
Yeah.
Great. So this is Bitcoin 12-hour. Same place we've been at essentially yesterday. It's the same story, and just we're at this support zone here. There is this low volume kind of node here as we enter this support range, but so this is obviously the range to trade, but we need to see some kind of pattern. Right now we feel like we're just standing on the edge of a cliff, but there are significant buyers coming in here, as we've already been discussing the last couple of days, that this is strong resistance, and this of course will therefore be strong support. And I think this chart probably highlights this situation at the moment. So this is obviously a support range made up of the all-time high from the last bull run, 69k, and the first attempt to break that back in March 2024. That's what the range is made up of, and essentially we are just above it. Now typically, if we were in a different type of market, I'd quite expect a reversal pattern to be printed here and for it to carry on in its way, but obviously we have to look at in bearish conditions such as this, or rather such extreme conditions such as this, and we have to just fall back on some basic rules, which is, if we're looking to enter Bitcoin for the long term, or even for a long trade of any kind in this area, in this range, we need to make sure we are going with the most buyers. We're entering with the most buyers. And even though this is significant support, this is where the most buyers will be. And this is why I think we should be waiting, of course, to see what happens, especially because we haven't had any indication of a trend change, at least on the intermediate time frame. So we need to pay attention to this zone, and we need to pay attention to this level. Obviously the ideal situation would be a reversal pattern here, an inverse head and shoulders, or a double bottom of some kind, or just basic trend change of character, but we haven't seen that yet. So it is a waiting game, but this is the 1 hour, and we have obviously a slightly bullish context here with a double bottom. This is just the 1 hour chart, so there's a potential that we might see a bounce here to the top of the range. However, we're not looking very strong on the second bounce to start with, so not promoting a long trade. But if you're keen to trade in that direction, please be aware of where the buyers are. They are here. I would argue any long trade should be right at the bottom of the range to give you maximum control, but as we talked about, this is where it's all at. So maybe a short trade from this area, I'm not sure, but this is an interesting way to look at it. Obviously, we need to see a higher up here, and this is the 15-minute chart kind of, which we're doing, which is good. So let's give Bitcoin Let's give Bitcoin.
It's the first time in about 3 weeks that you put some shoes on your chart. I love it. I love it when you put some shoes on your chart.
That's my favorite thing to do. Make it really clear for everybody. Downtrend, uptrend, right? It's just the teacher and me. So, but yeah, I mean, look, we've got serious resistance. We've got the fib level here. We've got this golden range here, which is problematic. So we've got a higher high, but this is just the 15-minute chart. And unless we firmly break up into this upper range, you know, we need to look at this chart as it is. That probably we're at least coming back down here to find some footing. But just to give you a bit of bullish context, maybe a bit of bullish feelings about Bitcoin. This is open interest on the bottom. This is Bitcoin weekly, and of course we have been in a downtrend the last few weeks, but so has the volume. And of course, when we have a downtrend in the price action and we have descending volume, we know that that might be as a result of the sellers losing steam. And then you pair that with a slight divergence on the open interest, which sometimes does front run Bitcoin moves. This again is probably supporting, Jannie, your viewpoint that we might get a bounce from this upper support level. But just food for thought in terms of the open interest and futures, and how that can maybe be an indicator for us. But this is Bitcoin dominance.
Sorry, Paul. Sorry to interrupt you. If you could just go back there. Where can people find that information? Is it an indicator? Is it a website where you get it, or where can people find this open interest and that kind of information?
It will attach. It's a trading view indicator. It's, if you've got a subscription, it will work as long as you're on a perpetual futures contract token. Then which is Binance, which provides the open interest data. Some other exchanges won't necessarily give TradingView that feed, but if you're using tokens which are also available on Binance, which we do here on Prime X, then the open interest should just be a case of just adding it to your chart, and then you can just see it. And usually, in my experience, when it's been heading, when there's parity between the price action and the open interest, you know, we're heading down more. But when you start to see a few divergences, and it's not quite as simple as this, there's a lot of ways to interpret open interest. So this is just, please, this is not as strong as you might see divergence on the RSI or other oscillators. But yeah, it can be a little bit handy to give you an insight, speaking of the futures market. But yeah, it's really straightforward indicator, Jannie. Yeah, just
okay.
Just a week.
All right. Thanks.
Yeah, so is that kind of a reason to lighten up on shorts kind of thing? Would you see it as something to say, well, yeah, the trend is still down, but it's not as aggressive now, kind of thing?
Yeah, and it's just, you know, obviously the volume thing is obviously the most basic form of identifying when a trend is weakening and the sellers are weakening. But you'd expect to see this as we approach long-term support, which is where we're at. But obviously we need to have some follow through as well. This could still just roll over. It just gives you a slight different perspective into maybe what people are thinking. But you know, not out of the woods yet for sure. As problematically, Bitcoin dominance, our good friend, which gives us an insight into the money flow for the altcoin market, is barreling upwards, and it seems to be breaking through fib levels. So I do feel that we'll be heading up to at least 200% level here, which is not going to be good for the altcoin market. As you look at Ethereum, which is a great barometer, you know, buyers have given up of getting back into this range. We're losing this support. And if you look at Total 3, which is the crypto total market cap excluding Bitcoin and Ethereum, you can see, unfortunately, instead of bouncing at this support, which has been in place for 3 quarters now of a year, we're now losing it. So looking pretty rough for the crypto market as a whole. But Bitcoin, of course, is proving the most resilient, and we just need it to stay that way. So yeah, that's pretty much me in terms of Bitcoin. There is a few short opportunities which I mentioned in the top altcoin picks video on our Prime X's YouTube channel yesterday, and one of them is coming into play. So this is GMX. This is an altcoin we provide on Prime X, and the premise of the trade would be we've lost, essentially, I'll just switch it to the daily. We've lost long-term support and are in negative price discovery, and we're in a very strong downtrend. And the premise of the trade would be to essentially short this range, but because we've got the 200 MA on the 4-hour sweeping right ahead, that would be a perfect kind of, if it coincides with the top of this range, that'd be a great short opportunity here, which is coming to play at the moment. And then of course you would short it to the bottom of that range. No long opportunities really at all when we're in negative price discovery. And there's a couple of other opportunities. This is H bar. which we're looking at, but it's not quite there yet. It's got a long way to go, and obviously if Bitcoin's going to make a move which pushes this upwards, maybe the short opportunity won't be as tasty as this one, which is almost ready to go. So a couple of altcoin picks which are playing out, but that's why I'm saying shorts all the way at the moment.
Yeah, makes sense.
Yeah.
Andre, looks like you are maybe you've just joined, but I wanted to know, did you take that bound US dollar trade or not? I want to know. 1.286. It was a beautiful trade. I'm not sure if you caught that one. I'm not. Sometimes I forget people work during the day, so it is probably a bit of an awkward time for most people in Europe. If you have to go to work, you probably can't catch it. Yeah. So, what are your thoughts on Howard? Like, I don't think you've spoken about Bitcoin. Your view on Bitcoin.
Sure. Let me just 1 second.
Well, let me add a asterisk to that. Your thoughts on Bitcoin as well in the context as a potential store of money for people to put into at the moment in the given the world economy, perhaps. Because I think that's the question, isn't it? Right? That's going to make or break it.
Good question. Good
yeah,
question.
I just want to just hang on before you answer that, Howard. I just want to think of a way to complicate it even further. Maybe. No, just joking. Where's your? I can't see your chart.
Well, and also with comparison to 1970s gold.
Yes, that was a very good chart, and that looked. Man, oh man! Imagine if that breaks out. Because it's you showed that chart like a week ago, maybe longer, but it just looked like you just took the gold chart of the 1970s and just kind of edited the rest out. That's how identical they looked, Well,
let me bring it up while Howard's, because we've got plenty of time. So let's just while you're saying that, Jannie, and then that'll be a good lead in. So let me I think it will take me a minute to orientate this chart.
No problem.
I may just abandon this because when I can't find the chart, I'm just like, I'm not doing that. There it is. There we go. It's probably not lined up. I think there's another one. Let me try and find another one, just to highlight that. There's a cleaner one, I think. Maybe it's that one. No, it's the same one. Let me load up another one. There we go. Sorry, Howard, I completely just.
You go for it. I'm just trying to load up a logarithmic chart of Bitcoin going way back. So if you carry on, I'll be with you shortly.
Yeah. Here we go. This is the one you were talking about, Jannie, right?
Yeah, that's it.
Yeah.
Look at that, like breakout in the retest as well. It's now at the retest phase. You see that?
Yeah. Yeah. Good.
And even the little double top kind of pattern before that on that trend line. Double top, yeah. On if you look at Bitcoin as well, double top and then that correction back there, breakout, retest. It looks that is as correlated as you'll ever see on any chart.
Well, I don't think we're suggesting Bitcoin this cycle is going to go up to 2 million though. So let's just say that.
Why not? Why not?
Well, I could give you an answer, but we'll be here all week. Howard, it's you.
2 million is a lot. Okay, sorry.
All right, let's go. Okay, there we go.
Yeah, Robert, like you just mentioned, it's a prop firm futures account. We spoke. Maybe you joined a little bit late, but I explained why it's not a good idea to trade futures right now because it's the ATRs are too big. Is that what you found as well? Like you get in and you just get stopped out immediately. The moves are just the size of the candles are too big. You can't see it by just with a naked eye. You need to just measure one of the candles or put the ATR indicator on, then you'll see. All right. Anyway, so let me.
Okay. So I can't quite get the chart which I want to get, but so what I've got is this Bitcoin chart. We have from the low back in 2022. For me, we have a completed 5-wave rally, Elliott wise. So 1, 2, 3, there's your fourth wave consolidation, and there's your last push up to the swing high. And since we broke down, kind of made a new high, marginal new high, broke down, made the double top, had the retest of the double top break point, and now we started to break down a bit more. So what you normally get after a 5-wave sequence is you get a big correction retracement of the whole sequence. So I'm looking at probably coming back towards the lower end of this range here, the previous 4th wave, which is about 50,000. That's really where I think we're headed down over the next several months. I don't think we see new highs until we've done that. The last cycle, the last kind of 5-wave cycle that we had was this one here. We had a kind of 1, 2, 3, 4, and 5. It looks a bit weird because it's on a arithmetic. So if we can somehow change that, what's the best way to change this to a? Let's see. Yeah, not overly. Yeah. Yeah. So basically, I've got 1, 2, 3, 4, and 5, and then that was like a 70-odd% decline from the from the swing high. So it's and still to be a correction within the large sequence. I think you come back down here. That's not the end of the world for the long-term uptrend for Bitcoin. It's just a typical correction that we've seen, even going back much further. I'm sure, Paul, you remember a lot of these big retracements against the trend can wipe out 70-80% of the value from the peak.
Indeed.
Yeah, because I think we what's the correction now? Like around 40%, something like that.
So from 109 down to where we are. Yeah.
Roughly 40, 35, 36%, something like that. Yeah, it's been a deep correction. Okay, yeah, that's very interesting. What about so the actual Elliott wave count? When do you start that? Because you just mentioned you are at the end of a cycle now. So when does the new cycle start?
Okay. So the sequence that we've completed here, this 5-wave sequence started here. So that was at the end of the last big bear market or correction, whatever you want to call it. So that's the start of the bull market. 1, 2, 3, 4th wave consolidation, and then a final push up in wave 5. And once that's complete, then you're looking for not a correction of this last push up, but a correction of the whole thing. Which is
but it has corrected by 40%. So what I'm trying to understand is so you don't so when you're at the top, it's okay, that's how do you identify the end of the final wave? Like what is your this is it, this is the end?
Yeah.
Is it when it breaks the double top neckline, or what is your process to identify that?
I would say that, because once you bust the double top neckline, then you're finding it pretty hard to justify this being a short-term correction. So then you look at the bigger picture and say, maybe if you're not too sure about it, maybe we're correcting something bigger, and that's when the bigger picture stuff can come in.
Okay.
So yeah, and you say we corrected 40%, but that's not. For me, I think we need to. If you look at the last correction, this actually was a correction. What was the loss of value from the peak? 69 down to.
It was about 70, I think, something like that.
Yeah, 69 down to 15 and a half. So I don't think. I think it'd be quite healthy, get back down to 50, the 50-60,000 mark, and then we can start to think about getting ready for the next leg up kind of thing.
Yeah. I mean, I think you will get a lot of mixed opinions, because for many people that would mean like a very significant trend has been broken. Because if you draw a trend line all the way back, up there, people
for this one,
I mean, look, there's a lot of factors to take into consideration, and Bitcoin is the asset which surprises. It always has been, and it always does. Now, the issue is right, and we've obviously been talking about this level where we're at now. Timing is part of Bitcoin, right? So the last bull market finished essentially at the end of the year, and that's essentially the clock it works to. Right now, we're not at the end of the year, by any means, shape or form. And this 4-year cycle, it does have ebbs and flows, and it does, but the issue is, of course, in the context of that, this cycle is the first one where we've had some serious mainstream institutional adoption with the ETFs and everything, right? So we have a completely different set of players involved. And I think the only prediction which I could have ever come up with for this bull cycle is there's going to be a lot more volatility than we typically expect as a result. Now, you add in, of course, the context at the moment where you're going to have these funds and these public bodies which have invested heavily, and governments which have invested heavily in Bitcoin, reconsidering their positions at the moment because of what's happening. So I can't believe, in fact, that this week we've been talking about these lower levels, 50, 40k. It fits in. I mean, this, on this, that's 45 here, right at this support line, right? So it goes in the other direction. That all makes sense. It all kind of lines up. But it's the clock. The clock is what's curious to me about this moment in Bitcoin's history. We have a lot of people which have been still holding from the top at the start of the year. That we're seeing that data that they're still holding it at the moment. Obviously, that will change if we lose this level and we head down, and that, of course, will then become a self-fulfilling prophecy, and we'll go down to those levels and find our feet. But if it takes too long, I'm not sure what's going to happen, because we should be entering a bear market next year and by the clock. And what will happen if this retraces, but then investors force Bitcoin up as the conditions later in the year perhaps improve, and then we have a late bull run, and then how is that going to impact the next halving? So lots of questions which I don't think anyone can properly answer, other than just explain all of the balls up in the air at the moment and just try and see which way they land. But I think Howard is probably speaking the most sanity, because all we can do is look at the charts. And if we lose this level, which is just below us, I mean, I think, Howard, you're absolutely right. That's where we're going. But it's Bitcoin.
Yeah. Anything is possible, almost.
Well, yeah, literally anything is possible. But I'm still a big believer that when it's up, you'll know when it's obvious. When it's obvious the position is going to take. So I mean, you said about Howard is sane. I think Howard is completely insane. But
that's about.
No, I don't. No, I don't. I don't think that, Howard. That's just a joke. You're one of my favorite consultants.
If not the
insane consultant.
Yeah. Look, I think we all look at technical analysis, and it's just I think the point where we are right now, it's just one of those things. Like it's a critical area. Like it can bounce off there and then make new highs, and like, whoa. Or it can go down to 50 or 40, and but even if we do go down to those levels, don't think the confusion and the doubt will go away. That will never go away. It's like, oh, okay, we set that at 70, or we set that at 80. It can't go lower. 70 is very low. Well, now it's at 60. Now it's 50. So that's just part of trading. That will never. I don't think that will ever go away. And once it hasn't gone away from me, there's always that element of small element of doubt, not doubt, but uncertainty, because you can't predict what's going to happen next. You can only stack the probabilities into your favor.
Yeah.
But that's all you can do. So we all have our different strategies and different views. That's why I always find it fascinating to listen to what other people have to say about certain markets and their take on it, and how it either agrees with what I'm looking at, or how it just completely contradicts with what I'm looking at. So the 50 level for me at this stage is, as I said yesterday, it's not really something we should talk about now, because we have a very, very major support level on the monthly that we first need to deal with. So that is the talking, for me, that should be the talking point for now, right? Like, let's.
I think it's important. Look, I mean, I don't think we're not trying to be, we obviously know what's happening in the world. And the question is, the most interesting question is, and we look at in terms of the whole gold thing in the 70s and all that kind of stuff, and Bitcoin's timed approach to the way it operates and its cycles operate. I think that where are people? The question is on my mind at the moment is, where are people going to decide to put their money in whatever content? Where will we end up landing in terms of whatever's going on with the trade war? Where are they going to put their money? And all I know is that any list that people have in front of them, regardless whether you're a hedge fund or a stockbroker, or you're an investment fund and you've got tons of clients and you've just launched ETFs or whatever, right? It doesn't matter. Or you're just a retail trader. You've got to have, most of these places are going to have a piece of paper and thinking, right, where, including the White House, including Argentina, right, in all these places, where are we going to put our money? And Bitcoin is always going to be in the top 5, right? And if everything's going to hell and the dollar is not becoming a store of value like it was, for multiple reasons, not just about the trade war, we've got other elements, of course, around the world trying to, essentially dethrone the dollar as the currency of choice. So there's a lot going on. And then if the stock market isn't going to be a viable option for people, if bonds and all kinds are not a viable people, and the dollar's not a viable, and the pound, whatever, right? It's what are you left with? Gold for sure, silver, Bitcoin,
Cash. Don't forget cash.
Cash, sure. But I mean, look, I lived in Venezuela for 5 years. Cash is overrated.
Yeah, no, look, I fully agree with you, but that is just, I'm just like referring back to the history of 1929 when we had that crash, and then in 1930 when the tariffs were imposed. We had this, they, whatever. It was a similar kind of situation where people were holding on to cash, and the whole economy just suffered because of it, because nobody's consuming anything. And all the businesses suffer as a result of it, and everything shrinks and struggles. So cash is definitely, it's bad, but as I've mentioned several times, Warren Buffett is in cash, right? He's in cash, and he believes that's better than being invested in anything right now. So that is a problem. That is a problem if the money just disappears and it doesn't get reinvested elsewhere. But then you always also have, obviously, people who will actively look for opportunities. But, what kind of volume are you looking at? I don't know. It's just, it's a very, very confusing time.
Yeah, this is that's a chart of dollar Swiss. Usually quite a boring market, but you can see it's having a crack at its recent swing lows. It seems that people buy the Swiss franc when there's periods of stress, or they very often they do the yen and the Swiss franc. And I think as somewhere to park your money, a lot of people do that when the world economy is not looking too hot. The Japanese yen and the Swiss franc seem to be maybe kind of safe havens, whereas the dollar used to be considered to be a bit of a safe haven. But I think now, with the change in administration, I think the US dollar as a safe haven may not be the case anymore.
Yeah, I agree with that. The dollar is the problem, so it's not going to be the safe haven this time. I think we've seen that gold was obviously gold's been rallying for this entire year. So it looks like that's where people went with their money. But Andre has a question. Maybe Howard, you can take that one. Will the dollar strengthen, or will they look for new currencies like the euro? I think you already kind of answered that.
Yeah, I think the dollar is in a secular bear market. I think the dollar is going down against most currencies. Doesn't necessarily mean that the euro is the king, but I think the dollar is in a secular bear market.
Yeah. Hope that answers your question, Andre. And then Robert has something on Bitcoin. So Paul, I don't know if you want to take that one. The more that Bitcoin is accepted, we'll see it trade and move more like traditional price action. I suppose I guess that's what PA stands for.
Yeah, I mean, this is what we were just talking about. So that is one school of thought, because obviously when an asset gets bigger, it becomes like an oil tanker. It becomes harder to turn and to move, right? That's the the bigger Bitcoin. I mean, every bull cycle we've had, the gains percentage-wise from Bitcoin has of course diminished as it's grown in size, right? And that's why altcoins come into play, because then those are what allow you to then make tremendous gains, because Bitcoin can't really do that anymore. Although Bitcoin puts in gains which are amazing compared to most other assets. So there's two schools of thought. There's the school of thought that institutional adoption is going to initially at least lead to much more volatility, which lines up with kind of what Howard was saying. The second school of thought is it just becomes so big, then it does just start behaving like, you know, traditional stocks, more or less. Probably we're a few cycles away from that, but that all of that ignores the machinist nature of Bitcoin and how it works as a de-inflationary asset. So I think there is the behaving like a traditional stock is maybe the future, perhaps. Then there is increased volatility this cycle in terms of primary trend lines are broken, but then support is found, and then it goes up to the moon like a rocket and then heads over to Mars instead because it just fancies it, right? Or because of the because of the issues in the world economy, Bitcoin is seen as a massive store of value, and people aren't selling it a while, and that propels it to levels like we were looking at that gold chart just a few moments ago. So there's a multiple scenarios, and it's certainly going to be a popcorn year, I think, next 12 months. But I think only time is going to tell, because, you know, we don't even have a solid foundation to make any kind of prediction off at the moment, because we don't know what, you know, the world economy is going to look like next week, let alone in 4 years' time. So
yeah, that is so true.
This is just a 3-day log scale, right? And it's one of these, what we're talking about, the primary trend is now in the process of being lost. And of course, nothing's tragic at the moment, right? It could jump back in, it could be a bear trap. But these levels, again, there's 50, are looking a little bit more on the cards. And there's your added volatility. So the proof, it seems to be happening in front of us at the moment, a regression down to here. I shouldn't have said the R word. I'm so sorry for that, everybody. A regression to here.
Recession. Your Bitcoin is in a recession.
It might seem logical, which gives us time to sort out this mess, and then maybe we have some crazy rally at the end of the year, which pushes us into where we usually were as a bear market, and then we have it sell off. And then, but I mean, look, that's the best I got in terms of what we're dealing with at the moment. So
yeah, I think we just got to take it one day at a time and just look at the charts. And, you know, when it's obvious, it will be obvious. We've seen multiple times on Bitcoin where it was pretty obvious what's likely or most likely to happen compared to the alternative scenario. And those are the moments you just have to wait for. And I think right now it's not that obvious, because like I think like as soon as you find yourself in a position or a place on the chart where you can make or come up with so many different scenarios in terms of what's likely to happen from this point, and you end up with like 6, 7, 8 different scenarios, you just need to kind of tell yourself, okay, it's clearly not a good time to do anything. Where at other times it will be way more obvious. You know, like for example, I always use that Bitcoin or even the pound US dollar when we were in that sideways range. Okay, the bias was so clear, and we were, you know, the breakout and the scenario was, the probability for that to happen was so high. You know, it's like hardly anybody was short there. That's what I'm trying to, or that's what I'm talking about, right?
Yeah.
So I'll you know, so I'll show you what I mean on the chart for the people watching who haven't watched us before, and for the people who have watched us before. It's for all of you, Okay, so let's have a look here at the Bitcoin chart. Where's that Bitcoin chart? Yeah. Oh no, I don't clean my charts. Somebody called my charts Batman or Spider-Man yesterday, so I deleted my lines.
I saw that one.
So where is it now? Okay, I deleted it. Okay, great. That's just great. But anyway, I can quickly draw it up again. So it was on the 4-hour chart, and we had this little channel, okay, that was there. And then on the 4-hour chart, we had this downward trend, okay, that's the broader. I'll just change that color. there. Okay, so that's what it looked like, and then we had this this neckline area was around there somewhere, and then we were waiting for the bucket. So in this scenario, and this is the point I'm trying to make. It's like, yeah, when you have to draw probabilities. Okay, so we had this little ascending channel in a much broader downtrend. Okay, so this is the time for this is when you can draw more than one kind of a scenario. You can have multiple scenarios here. Okay, this can happen, this can happen. You know, you can have 5, 6 different scenarios. But when you break out of the channel here, and you now it's more obvious now. The picture becomes a lot more clear. It's okay, it's breaking, it's definitely bearish. Are you going to chase this? No. We want to wait for a retest, and we identified this pocket area. It's going to be very, very difficult for you to come up with more than that scenario, other than it can just push, you know, straight up, and then we're confused again. Does that make sense? So, because you have everything to make a good decision, very clear, obvious downtrend. You've got this correction channel, you broke out of it, little retest, and you go down. That is clear, and that's what I'm trying to tell you. Like, if you come to a point on the charts where we are right now with Bitcoin, and it's like, well, the scenario is it could go to 50, it could go bounce up here, it's typically at those crucial levels where it's not clear. And Paul, you've said this yourself, and I'm sure Michael said that as well, is that the money is made in the middle. The money is made in the middle, and right now with Bitcoin, we're not in the middle. Right, we had a key support level, so it needs to kind of just get away. Make up your mind from that point, not as a trader. The market. I'm talking to Bitcoin right now. Get away from that area so that price becomes a bit more obvious in terms of, you know, what's likely to happen, or what are we looking for now before we take a position. Does that make sense?
I mean, look, this is. I think, look, everything has to be viewed in the context of what's going on in the world right now. Okay, because it's like, traders are sitting on the sidelines, investors are waiting to see what happens. So obviously people are looking at the charts, and they see everything we see, you know, but it's like they're still not going to pull the trigger, because what things are going to happen next week, we don't know. So this is the issue. So we have got this slow drip feed of news coming out of the United States and other parts of the world in terms of so look, what was just you know, the US Treasury will reevaluate regulations that may be hindering the innovation in the blockchain. That's just come out today. So this drip feed of positive news about crypto in the context of turmoil may start making people like, oh, what's this? What are you trying to make me look at? What's Bitcoin? Bitcoin? Really Bitcoin? You know, and there is a solid argument that what we may see as a result of these trade wars is Bitcoin doing things it's never done before, that might be breaking to 50K, but it may also be putting in gains which we couldn't even possibly imagine for this cycle. And I think so there's a genuine argument that Bitcoin will be the winner of these trade wars, right? But right now, you know, for any kind of investment, clarity is required, regardless of whatever it is, and we need that first. But if it doesn't come quick enough, it doesn't matter what we see in terms of support, because we've seen it already starting to break. Then you know, people will just wait and try and catch a knife, and then it might be too late. So I think this is the context, this is the problem, because I think the reason why we are it seemed maybe for observers when we're talking about this that we're actually not at odds at all. I think it's just the TA is undeniable, but I think the issues with the Bitcoin cycle, its history and precedents, are they going to repeat itself in the context of the moment? Those are the biggest questions, I think, and the answer is in the news, which is such a sad thing to say.
I mean, just looking at that. Just looking at that chart, it looks a little bit like that last sideways move before the big breakdown. Where it's kind of retested support and it's bounced up, and they're thinking maybe it's a double bottom, maybe not, and maybe you need a bit more time just going sideways to figure out whether it's, you know, it's literally an L-shaped recovery and then we go down again. You know, right now perhaps the risk could be for, you know, oh, maybe it is a double bottom if the news comes out and it's good.
But I just want
to work in that. Say we do go a bit lower and we sit in that support range, which I identified earlier. it could just range in that until the clouds clear. I mean, that's perfectly normal as well, because there might just be enough buyers coming in at that level to sustain it, right? As long as we don't have, you know, more than a couple of months of more pressure. But yeah, it's going to be interesting.
Very interesting. But I added enough of you. Bye. I'm just joking. No, listen, look, no, you.
Such a kidder.
I am a kid. Oh dear. Okay, that anyway. So, but to add to your look at the reason why I'm showing you this is to just point out. By the way, this rejection level happened during the tariffs announcement. So, I still think that you just need to get when you are looking for trading setups, just make sure that the probability is so strong in your favor that the opposite, even though it can still happen, the opposite is highly unlikely. So really high quality setups, and that's why I'm using this example, because you can look at this chart and try to come up with a way or an argument to say we're definitely going to go long here after you rejecting so strongly after resistance area. But this is this whole story. It's not just looking at the charts. Oh, look at that bearish candle. There was a whole story unfolding. The downtrend, the little upslope, you're breaking down, retest. Okay, what is the opposite argument for that? Very difficult to come to the opposite argument for, other than a short. That's the point I'm trying to make. So. At the moment, we don't have that.
Yeah, but there is a
because at the moment
missing from your chart as well. There is the 1 day 200 MA, which of course is what gave a little bit of bullish context within that pattern. And again, it was coincided with some negative news. So there's a few things going on here. And the thing is with Bitcoin, and there was obviously we're looking at, there's also a set of different ranges as well. So we didn't just lose that pattern, we lost that pattern, the 1 day 200 MA, and the range. So there was a lot of confluence with that news, unfortunately. And so I think this is the problem with Bitcoin, right? Because having traded it for many years now, or at least certainly observed it on a daily basis, there are the TA with Bitcoin typically is nowhere near as reliable as it is for the altcoins or the other stuff, right? It just tends to look at a pattern and think, right, so you think your probabilities are 80% to go to the downside? Nah. I'm going the other way. And Bitcoin really loves to do that because it's a manipulative market. And this is how people make money with Bitcoin. So when we're talking about all those weeks ago, when we were talking about that context, the TA, as you said, is undeniable, but we also know that Bitcoin reacts very strongly to certain moving averages in certain contexts. And I think, and that's the thing. So, and if you're going to trade Bitcoin, you've got to be kind of aware of these tricks, which are otherwise not apparent with regular TA, because that's why I don't trade Bitcoin very often, because it will pull the rug from out of you, underneath you, and if you are trying to trade it, you've got to try and figure out when it's next going to do that, you see. So that's why there's a bit of ambiguity, I think, in the discussions, but yeah, for sure, it's
I guess one thing I'll say from a technical perspective, when a market retraces more than 2/3 or three quarters of a swing, then the odds favor complete retracement. If you go back to your Dow theory and your basic technical textbooks, if that pullback that we saw that has nearly taken out the low was a corrective pullback, perhaps it should have based out a bit higher up and not come this far down.
I mean, look,
I think there is weakness in that structure that we're looking at.
I think, look, I just to give people insight into my actual thought process as a trader with the crypto market now, which I think, Jannie, favors your viewpoint more, right? So I think just to back you up a little bit here,
I don't need your backup.
Need as much help. I need as much help as I can get here.
So
carry on.
So what I've been doing over the last few months is I've been preparing for the possibility of this move in Bitcoin dominance, which is essentially the cryptocurrency market, just excluding Bitcoin, just exploding, right? This is the bull run. This is what essentially is. And it's happened 240 days after each halving. Now, it began to happen exactly 240 days after the halving, but following the election. But then, of course, things have gone a little bit wrong, and this has been extended. But I am still planting seeds with altcoins. I am simply planting them with caution and in a way where if I can keep just repoing it down. So I'll enter at a level, and then if it breaks the level, I'll just reposition it. I've been doing that all the way down to hopefully eventually catch the bottom when this does. And I think we might come up here a bit more. You know, we've probably got a bit more pain, but I'm still waiting for that. And the fact that I'm waiting for this move means I'm still bullish on Bitcoin, because it's Bitcoin which will facilitate this, right? Because Bitcoin, it needs, of course, to be in an uptrend and continue with an uptrend in order for this altcoin bull run to come into effect. But the issue is, of course, it's not just about Bitcoin, because the rest of the altcoin market is not de-inflationary and they are risk assets. And who's buying risk assets now? But I am still continuing with this premise, at least for now, which of course supports Bitcoin surviving this support line and ensuring it doesn't flip to resistance. But you know, I will change if nothing else does.
Yeah, obviously, I mean, we're just back to take it one day at a time and just wait for, you know, as I always say, like every day, 24 new 1-hour candles gets added to the chart. The picture keeps changing. The picture keeps changing, and yeah, it will. The high probability setups will eventually come. We're just not in that place right now. I do have, as you know, as I've said, I have a slightly more bullish buy. I'm neutral, but I'm leaning towards the bullish side, mainly because of this. This level here, right? This really strong. So to me, that is such a strong support level because of the prior action again as well. And we had this pivot here, this pullback was pretty shallow, really strong pivot. So for me, if we come back into this area, and now I know with with Elliott wave theory, it's going to look completely different. You know, there's so many different ways to look at the market. But for me, that is such a strong support level. And it is important that it holds there. It's really important that it holds there. Because what's the level below that? This level here, 48. You see, for me, that would not be a level. I don't know what the price action would look like, because it all depends on how price action actually unfolded to get to that point. It's very difficult.
Yeah, I mean, if you take a look at the previous if you take a look at the previous bear market on that chart, that's what we're talking about. That kind of multi-month.
Oh, you mean
yeah, that bear market. So 3 down, little correction, 3 more down.
Yeah. Okay, I see what you mean.
That's the kind of phase. I think we're in that kind of phase.
Okay, so but if it's going to look exactly like that, then it's going to needs to make new highs first, doesn't it? Or
no, I think we're on the. Yeah, I don't think it's looking exactly like that, but I think what we do is we come back into that range, the range you pointed out, 48 up to the swing high.
Oh, this one, yeah.
Yeah, into that range before it bases out. Okay.
All right. Well, if you look at the price action on this pullback, and you see that really strong sell up, then you have the next. This is the monthly. The next monthly candle with that inside candle. That to me is always a break. That's a pause, always, and it has a very high probability of the next candle to reverse. And we can even look at the dollar index. You'll even see it. Yeah. Where was that? Over here. You see that big drop, inside candle, next candle reverses. You'll find so many examples of that. So it's especially on a key level, because this was a 61.8. I remember at the time I was thinking it could go to the 105 area. I mean, it didn't, but that's not the point. The point is this formation here, big drop, inside candle, that's breaks. Putting breaks on, probability for it to reverse is quite high. So you saw it here as well. Big drop, inside candle, and then you got the reverse. And that is what we're getting here as well. you have a very, very strong sell-off, and then you've got this inside candle with fairly large wicks at both ends, which is very similar to that. And now we're making a lower wick here, coming off a very strong support area. So for me personally, it is really, really important that this holds.
Yeah. On the last one, it didn't break the low at all, whereas this one has broken.
Yes, yeah, but I mean, this is also like a magnet. You can argue that this is almost like a magnet, the support area, right?
Yeah.
So
that's strong. That is a strong level, to be fair.
It is very strong. Yeah. So this is just so when it breaks down this level, if we get a close below this level, I don't know. It's going to have to like form some sort of like a hammer and just get back up there fairly quickly, because if we're going to start to mess around here, it's going to be a very difficult market to trade, I think. It's just not going to be very easy. So so I wonder if that's part of the reason why I come up with all sorts of reasons for why this is going to go long. No, it's not. It's not. I can look at but you understand what I'm, we've been through the charts many times now. But yeah, it's only the 9th of April.
Yep. Early days.
It's already moved pretty significantly in a very short period of time in terms of the ATR. It's a pretty significant candle for, a candle that's only 9 days old. A monthly candle that's only 9 days old. So I would like to, even if it does go lower, as long as we just towards the end of the month, if we can close bullish, hopefully maybe even engulf this little body there. That's what you want to see. That's what you want to see.
Let me share this chart just to finish then. I think if we're talking about this tussle Bitcoin's doing. So we looked at this, I think, last week. And we're talking about, obviously I was talking about earlier, the 1 day 200 MA is a significant line in the sand for Bitcoin. And of course, on the top, this is where we are. And we have a little bit of correlation, but you can see, previously, we've had this dance. You can see the symmetry. We've had this dance. Maybe just move it a bit like that, perhaps, and then we recover them, and we come around. And this is pretty typical for Bitcoin to mess around this area. But you can kind of see that, if we start having a dip much lower, I mean, I just add that it's problematic, because we need to just be in this range. We need to still have the 200-day in play, and the further we get away from it, the less these historical patterns may not play out. So. But it's still plenty of time to recover. We've obviously got support below us, but it's I mean, this is Bitcoin versus the dollar, just for a bit of perspective. And I think I mean, Howard, what are you seeing here?
A weaker dollar and also weaker Bitcoin at the same time.
And not much. Yeah, I mean,
they're going together now. They seem to be.
Yeah. So just trying to give everyone a well-rounded perspective, but I think this is going to be the conversation we're having about all the assets. How is the response to the trade war from certain countries going to affect Forex pairs? How is the stock market going to react to all of these things? I mean, when you've got news articles coming out like, a new iPhone, if built in the US with a factory, could cost 3 times as much. I mean, obviously that's a bit sensational, of course, but it really hammers home the shift which is happening at the moment.
It's crazy stuff going on, really.
Yeah. So
it makes trading fun.
Well, the thing is, trading is never easy. It's always tricky. So to add this to the mix, all this nonsense is just making it even more difficult. So I think a good advice probably would be to take smaller positions than usual.
Yeah.
And as I showed on the Bitcoin chart earlier, that you really need to when you stack the probabilities, just like when you look at the probabilities, it has to be clear in terms of one thing is way more likely to happen compared to the other scenario. That is really, really important. And I think now, especially with this Bitcoin, especially because because it's at such a key level now. You don't do anything. You really want to get confirmations on multiple time frames.
Yeah, and do what I'm doing, right? I am entering the market with the presumption it's going to head lower. So I'm entering with that in mind. I'm entering, I'm entering, I want to try and catch the bottom of some tokens. I want to do that, right? But I have to understand that, I have to follow it down. So you have to, don't just invest now and then just wait, right? Realize we're heading down probably, and you're just trying to scale in slowly and get a good average price. And if you can keep moving them down with the price action, then that's fine. But that's your approach. It's not buy now, cross your fingers and wait, right? Don't do that. Not in this market, for sure.
Yeah. Only with monopoly money.
The market will tell you. The market will tell you when it stops falling and starts to turn around.
Sure. It's usually when it's got all my money.
All right, guys. But Paul, Howard, always nice to see you guys. Thanks everybody for watching. Have a great day, and good luck with your trading during these very difficult times.
Thanks, everyone. Take care.
Cheers.
Take care, guys.
Cheers. Bye.
Hello, Michael. How you doing,
Hey.
buddy?
I'm great. I'm great. What about you?
Yeah, not bad, not bad. I think we're just waiting for Aymane.
Okay.
He should be joining us any second. How was your
Nice.
trading day?
Not too bad. I was a bit cautious today. I was really only looking at UCAD. I'm actually still short UCAD now.
Nice.
They had some news that came out at 12, so I was a little cautious on it. So I actually only got half a position on it, but it's basically hovering right at my entry price. Hey,
Yeah.
there he is.
Hello.
Aymane, how are you?
I'm good. And you, Michael, Sam? How are you doing?
Hey, we're awesome.
Could be better. Could be better for me. I had probably the most. I didn't lose money, but I had the most annoying trading day ever. Like, oh my! I think at one point I was up like $6,000 on one trade, and I got out at like $800. And then another one, I was up like $4 or $5,000, and I got out at -80.
Oh my God!
The market just wasn't moving. It was killing me. Absolutely killing me.
Yes.
That hurts more than just losing money. Do you know what I mean? It hurts more.
Yeah.
Yeah.
Well, I can imagine like up 6K and then break even or slightly small profit. Yeah.
It's the worst. It's the worst. That's the emotional roller coaster for sure.
It just wouldn't move. It just wouldn't move. Like market open, right? Pre-market, it moved more than now it's moving. I just checked that, and then now it's moving. Yeah, of course, yeah. That's just I don't know.
That's the same thing. Same thing for me. Like I've been in UCAD for 2 hours. This thing is just sitting here. It's just now moving.
I don't know what happened. I don't know why, but you know what? Look, these things happen. There's going to be these trading days that's just going to tick you off. You know, you can't change it. You can't do anything. In fact, let me show you. Let me just get it out the way because I don't even want to look at this trade ever again in my life. I'll pull it up. All right, so I'll first share the actual chart and then explain and then show you the recording because. Yeah, I am annoyed by this.
Yes.
It should be up on the screen. So market open was this candle here. We broke above this area here. And then I was waiting for it to come back down so I can buy into it again. If I go to the 5 minute, you might be able to see it a bit better. So yeah, we broke up above it. And then I was waiting for the pullback, which did happen. Oh no, wait a minute. No, sorry, it was here. It was here. My bad. Yeah, we broke above it and then we kind of pulled back. And then I got in where there was lots of heavy buying. And I went up all the way to this peak. And then eventually it got me back out because I was targeting this area here, which it finally just did it now. But that was the area I was targeting. And then as it, all right, got me out at like $800 or something. I was like, all right, fair enough. Not a big deal. And I started watching the market and there was so much heavy selling going on in this candle. I thought, you know what, we're actually going to go down. I think I changed my bias. And then I shorted the market as we pulled back up. And you can see what happened. Like it just kept going sideways, up, down, up, down, up, down. And eventually after this wick, which almost stopped me out, the moment it went down to break even, I'm just getting out of this trade. I'm not feeling it because that was my target then down here. And then it eventually, 10 minutes later, it almost got to my target, and now it almost got back up to my original.
Oh my God!
It's just completely, completely playing with me. The market completely playing with me today. It was an absolute joke. Let me show you the recording. You'll see what I mean. It was just complete piss take, but
ridiculous.
That is part of being a trader, sadly. You're going to get these days. All right. So market open was that big candle. And then if I fast forward, I think it took me a while to actually jump in. So, okay, I jumped in here. So basically, I don't know, you can't see it, but I haven't got my little pen tool for some reason. Never mind. But these areas here, there was loads of heavy buying. You can see, I think, just about in the corner of the screen there. just a huge chunk of heavy buying. So as we pulled back and dipped back into it, and we rejected with more heavy buying, I decided, all right, it's time to start entering, expecting a nice move up to this area here, right? And it kind of did it. I mean, it pushed up really nicely. I was like, oh, this is great. Like, and I'm going to hold this trade. There's nothing telling me it's not going to do it, right? Literally nothing telling me. We were doing really well. It's going really nice. You know, I was holding through all the little pullbacks. I was like, nah, I'm still feeling this trade. It's looking good on the delta. Everything is looking great. Look, all these heavy buying, sellers trapped at the bottom here.
Right.
You know, like everything is looking great. There's no reason for me to think this isn't going to play out. I mark out the high as well, expecting, you know, the moment we break that high, and look at these big, heavy buy candles coming in. You know, I'm up quite a bit now. I'm taking it easy. I'm thinking, yeah, this is gonna, any second now we're just gonna see boom, 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 boom.
Yeah.
Two might take profit. It's gonna be a great trade. And then I was like a deer in headlights, right? I was already starting to get a bit nervous, put my finger on the exit, thinking, is this actually going to play out now? Because we're just not moving up, right? Like it's struggling here. I was thinking, okay. And then it just starts reversing. It starts reversing. I think, okay, it's a slight little pull back into this area. It's not a big deal. I'll hold it. It's not a big deal. And that reversal just gets worse and worse and worse. And I'm like, what is going on? So I just quickly get out. As it like gets close to my entry, I'm like, what the hell is just happening? At this point, I'm like, I'm looking at the 5 minute, and I'm like, oh, there's some big selling going on. Like they're actually being effective, the sellers. The buyers aren't pushing them away. And I'm thinking, damn, is this another little false breakout? Like I'm seeing buyers trapped at the top now. Look at it again, like 1,000 contracts, another 1,000 contracts on the sell side. I'm seeing this as, oh, you know, all these buyers are getting out the market right now because this is not, and we had this in the last couple of days. It would take out the little high and then do a really harsh reversal. And we've had like really strong sells and come in. So I'm thinking, okay, this is what's going to happen. I'm starting to build now a bias that, you know, what's going to happen. We're probably going to flood down back to the lows, you know, potentially. Like this is just a little wick, you know. I'm thinking, okay, I almost got caught out onto this trap here. So I'm just waiting for that sell pressure to get a bit stronger and then I'm waiting for a pullback into this area and see these sellers start defending, these heavy sellers start defending it, and then I can short the market. So I already jump in for one position, thinking any second now we're going to have a hard drop, right? And it kind of starts working out. It's still kind of hovering at break even. You know, I've got my stops. Look how close I got to my stop loss here. This was scary. No. I was like, oh man. I was like, any second now. I was like, what's going on? You could just about see it in that frame. Look how close it got to my stop. Right. I was like, whoa. Damn, like I'm getting proper screaming at the screen at this point, you know? And then I see this beautiful push down coming. I'm like, okay. The stops were maybe a bit too tight, maybe. So I just check, I sell again, I add another contract. I'm thinking, nah, these sellers have got it. So I add my stops just above, a little bit widen them just to, because there is actually, the sell pressure is actually, you know, all this area here. So I put it just above the sell pressure now. I may have put the stops a little bit too tight. And I'm just waiting. And, you know, we do push down quite well. Looking really good. Look at all this sell pressure coming in. I'm up quite a bit of money again. I'm looking good. I'm thinking now, yeah, we're going down now. We're going down. This is fine. But it just keeps reversing, keeps going up. And it just goes sideways and sideways. And I'm holding it. Like every part of me wants to just get the hell out of this market at this point. Thinking, like, at this point, I'm like begging, like, just go back to the low again so I can just pull out at a decent price. Like, give me something at this point. I'm starting to get all like emotional now. Like the emotions are coming through, which is really not good. It's not good to be emotional during a trade. Right. Because I'm starting to, there's no clarity in my head anymore. I'm like constantly flicking different time frames, thinking, what the hell is going on? Why isn't this dropping yet? Why is it not dropping? Right. And eventually it goes against me quite a bit. Look, we're getting again. It goes down. I should have got out. Just accept it. Hit the low again. Everything I was begging for happened, and I was thinking, no. This time it will break through. And then look what happens. I remember when this happened live. Look how quick it just starts shooting up, and I'm like, whoa. And I'm thinking, what the hell? Don't you dare go up anymore. And it just keeps going up. And it keeps going up. I'm like, no. And I'm like, I don't know what to do at this point. I'm like, should I get out? Should I just accept the loss now? Or is it actually going to go down? Because I was feeling like, nah, this is going to trick me. It's just going to go down now, isn't it?
Mm-hmm.
The moment I get out, it's going to drop. So I'm thinking, all right, if it stops me out, it stops me out. I don't care at this point. If it truly goes up here, then I know I'm wrong.
Yeah.
So I'm just kind of hoping, but these buyers are coming in quite strong. And then the moment it dips just into a bit of profit or basically to break even, at this point, I'm thinking, like, do I really want to get stopped out potentially because the market's being so irrational, or do I just get out and accept that today is just a write-off? And I'm thinking, I'm literally questioning it right now. Like, should I just get out? Take that tiny win and just accept it.
Just go.
And yeah. And then I literally got out as it went to break even, basically, somewhere here. Oh, I don't know where I got out. Somewhere here I got out. I remember I got out at a loss, actually. It wasn't in profit when I got out. I think it was like $80, like basically break even. But
yeah, I remember when I know you was thinking like when you finally closed, it's like, like a sigh of relief, because I feel it right now for you.
It was just 2 trades. Both could have been really good, but it just. And you know what? This messes up my psychology today. Really messed it up.
I already know why, right? Because any other time you end up closing it early. This time you want to hold to TP, and then this happens.
Exactly.
Yeah,
exactly.
I already know.
The amount of times I'm like Bambi and get out because I get spooked, right? And this time I was thinking, you know what? The market makes these big moves. The volatility's there. It can actually make these big, long moves. It's been doing it for the past few days. I'm just going to hold it this time. I'm going to hold it.
It's funny because it's like a pattern. Like the moment you decide, okay, this week I'm going to give it a try. Let it go to my take profits. I will not take any profits before it hits my TP. And it's a pattern. Like I don't know if maybe the market hear us, but it happened to me so many times. I say, okay, in the weekend I make some adjustment. I say, okay, I will let my take profits hit. The moment I decide I will let the price to arrive to my take profits, let's go back to my stop.
You can't make it up. You can't make it up.
But
and it's like the times that you don't do that, I swear the market just goes all in your favor. You're like, man, I'm like, that's so crazy. And like, you know what? I'm gonna sit on my hands literally. And then the moment you don't do that, it's like, how do they know? Like, how do they know?
but you did manage it very well because
I agree.
I got very lucky. I almost got stopped out. Let's be honest. That was pure luck that I did not get stopped out. Any other day that would have been stopped out easily.
No, about the first trade, like you were up, I don't know, like 6K, and it came back. Like the amount of emotions, like at this moment, like it's so hard. Actually, I took today a couple of trades today.
I hope it was better for you.
It was better. It was good. I took a couple scalps, and then I took my main setup.
Yeah.
Oh, nice.
I think from now on, I'm just gonna go back to my old style. When I get a bit spooked, I'm just getting out and securing my profit. I'm not gonna try this holding stuff because it's just not working for me, man.
Right.
Yeah. So the idea for me, let's go back here. So we open, the market open was here. The idea for me, okay, so we made sort of like double bottom, let's say. So yeah, the bias was bullish, but I had, let's say, a couple of supply zone above it. So there was different scenario. The ES we are pushing higher, but there is this supply here, like 15 minutes supply, took this previous week, close bearish. So for me, like I have to be careful, like when the price arrive here. But before, I plan to take a couple of scalps, like during like before we arrive to this zone right here. And I was waiting.
I'm sorry. I mean, is it me or is it like going in and out, Sam?
What is going in and out?
The voice?
No, everything. No, it's fine on my end.
Oh, it must be me. Okay. I don't know what's going on. Sorry about that. Go ahead.
It's okay. So for the A+ setup for me, this session was the same thing. Like come here to this supply here, take this previous week or another week that will be created, close bearish, and then check the footprint. The same setup. So this was my A+ setup that I was waiting for. But at the same time, I was saying like my TP should not for sure be lower than this area right here, because first thing, like today we have the FOMC later, and most of the time, just this time there is volatility, but most of the time when we have FOMC, there is sort of like indecision before the FOMC. So in normal days, like the price maybe move a little bit, but most of the time it stay in a range. So this was the main plan. And let me show. I took actually, but in different account, not in same account. I took, I think, 4 scalps, and I took 1. So before I think I never talked about it. Like I have a specific strategy for scalping. Like it's maybe price action. I use the 3 minutes, 5 minutes, and 30 seconds. So okay. It's the same thing. I think I draw something here. Yeah, it's not clear. So no, it's not clear here. Okay, so I will show it here. So it's the same like the same what I trade on 15 minutes, etc. Like just on the 3 minute, like wait for a candle with the wick, a candle which took the previous wick and close bearish, and wait for the next candle and look for in 30 seconds for the same candle. So it's quite simple, and it's 1-to-1 risk reward. And I took three trades. So here was the open. It's something like this. Just this setup was at the open. I don't want to take it. Like we took the previous week. We close bullish. So normally, if it was not the open, I will wait on. This is 30-second time frame. I will wait for the same candle. If I saw it, I would take buys, and the direction also was bullish. So let me pass forward this because I waited quite a lot.
You're still showing, by the way, the chart, not the not a video.
I share the entire screen.
Okay.
Okay.
Okay, you're up.
So this is just me waiting, a lot of patience. So I took the first trade here. Yeah, this here on the right, this is the 3-minute time frame, and here is the 30-second. You can see it here. So here we have let's say the confirmation candle on the 3 minutes. So we took this previous week, we close bullish. So I wait for the same candle here on the 30-second. So 3 minutes close here, like the next 3 minutes, it opens here, but it didn't give me any entry. You can see here, we didn't get the same candle even here, but like a couple of seconds later, we got our confirmation candle. Let's not yet. Yeah, here you can see it still didn't close. This candle here, it took this previous wick, and now we will wait for it to close green. Just this time I got big candle. I don't like to enter on a big candle, so I waited for it to retrace a little bit, and I checked the ATR. It was 51, so my stop loss was 51. It was 1-to-1 risk reward. So
Nice.
stop loss 51, take profit 51, and it happened so quickly, like in maybe in 1 minute. So I was waiting here to enter. I checked the 1 minute footprint, and I saw big clusters, and we are already bullish. And I was, if you remember, like I said, I was waiting for my A+ setup to sell here above. So I was waiting here, and then I execute. I check the ATR, put my stop loss here lower, 1-to-1 risk reward. And then this was the first trade.
Nice.
So I took
That was a lot. That was really good with the patience to wait for that setup. That was nice.
Yeah. Really nice.
Yeah, I waited a lot. So here I took, I think, the first trade. This is just me waiting.
Also, just to quickly say, if anyone's in any trades right now, you might want to check your charts.
Yeah, I'm looking at it right now.
I just had like alert after alert go off. Check the NASDAQ, Aymane, because you're sharing your screen. Have a quick look. Look what just happened.
Something?
Yeah, something just happened. My UCAD position just went all the way in profit just now. It's almost at move my stops to break even.
Whoa.
It's just,
you know, it's so weird. It's so weird because we don't have news right now. We had news at 12 Eastern, but that was it.
We've got there was something at in like 40 minutes. I'm pretty sure I saw on the calendar. Something FOMC related, but
yeah, FOMC. But okay,
meeting minutes. Yeah.
I don't know. I don't know if I can.
That's not now. That's like 40 minutes now.
No, it's in 40 minutes.
So Trump 90 days pause applied to reciprocal and 10% tariff. This is just 3 minutes ago.
That's it then. Yep, that would have been it.
Yeah.
Man, this is dangerous because look, you could be in a trade, right?
In a trade, yeah, something could happen like that.
Trump will say something, and then it will react like high impact news because it's just jumped up. The S&P has jumped up in a matter of minutes. Let me just measure that real quick. We went. Whoops. It jumped up 5.36% in a matter of minutes.
It's like a meme coin. We are trading a meme coin.
Yeah, we're literally trading meme coins right now. I've never seen such volatility.
What in the world?
I might start trading the pre-market now because it's so dangerous to trade. Honestly,
I might
start trading pre-market. I don't want to be stuck in this stuff, man. Like anything can happen. This is so dangerous.
Yeah, it is dangerous. So I took like the same setup, just this time based on the 5 minutes, small scalp. Here we have our confirmation candle. It's 5 minutes. Wait for the next 30 seconds to show me the same candle, and we had it here. Actually, this trade I move quickly to my break even, and I think it stopped me at minus like 20 points. Yeah, 20 points. Yeah, and then I took, this is the trade, another last chance. Same retest of the same zone, targeting the highs right here. and then this one hit the TP.
Nice.
Very nice.
So it was small scalps. So this was for the scalping accounts, and then I took my main setup here on the other accounts. Actually, I took one trade here, and it came back, and I didn't like the footprint, and I closed it at, I think, minus 20 points. And then I took another trade here and literally closed it here, lower here. It was a good decision. So again, 43 minutes of I didn't have time to cut the video, so
no, that's fine.
So actually here, like we tap into this supply, the footprint, we have sort of absorption. Yes, if I will target, I will target just like the 17,200, not lower, because we are pushing higher. And then what I want to see is the retest of this wick right here with absorption on the 5 minutes, and then like continuation to the downside here. But you can see it's so here it was, I think I showed it on the footprint. Yeah, let's go back a little bit.
My alerts are just going off. Boom. Whoa. What the hell is going on?
Yes, here. So on the footprint, I saw like this big cluster on the top of the candle here. So I said, okay, I will wait for next candle to open, and I will see if there is a seller's pressure. So I saw some sellers enter the market, and then I was watching like where can the price react here, just to prepare for the exit plan. Then here I saw some sellers enter, as you can see, but not that strong. And then like I check the time, I always check the time. There is 2 minutes left to the 15-minute candle, and I don't want this 15-minute candle to close green, because it will close inside this support. For me, this support here, like we could just go higher and take this high right here before we go lower. So yeah, I was here. I saw this 5 minutes. Yeah. On the footprint, what I saw here is like I saw on the bottom of the wick, I saw like minus 140, 144. So for me, it was okay. Sellers are not ready yet to push, so let's exit. And I exit the trade, I think at minus 20 points or 30 points. And at this point, I was waiting, just waiting. And it was right, actually, because we pushed like, I don't know, 70, 80 points here. And then like in a couple of minutes, let's move. Yeah, I saw again the reversal. 2 minutes for the candle to close. I was waiting for it to close, go to the 5 minutes, have a confirmation. And for me, just I draw this small trend line. Maybe some liquidity is sitting here. So, and then I took the sell based on the 3 minutes, actually, this time. Yeah, 3 minutes. Took this previous wick, close bearish. So I enter here after the close. My stop loss, of course, I will not let it go until there.
Right.
I will
this is almost an exact setup that I would take.
Yeah. Okay. So here, let's forward this a little bit. Here, this was really good. So on the 3 minutes, I had the confirmation and the footprint confirmed. Like we had like big cluster on the bottom of the candle. So what I want to see when the new candle open is continuation. I don't want it to come here. So you will see me, I moved my stop lower. So yeah, and then, okay, let's go. Yeah, here. So minus 150. And then Yeah, and then we had this push. So, and then I moved my stop loss here to 17,487. And because we were bullish, so I was expecting like the price to react here or maybe here. So here we have like sellers pressure are increasing, and then I took profits here when we broke here. So I was drawing here like, okay, we have this push, we have a failure here, and I enter here. So it was good trade. Like
Yeah,
Really
you smashed
nice.
today, Aymane.
huh?
I said, yeah, you smashed them today.
That's a
Yeah.
Good
beautiful trade.
So this one is
And
your
it's
your,
here when I
A
exit.
plus setup.
Yeah, for me this is A plus setup. Yeah,
Nice.
it's yeah.
That is a beautiful trade.
Yeah.
And then I exit here. I don't know if I showed the footprints. I saw big cluster in the bottom of the candle, and I said, okay, just take this one contract and
Really
full
good.
out. So I think I will show it somewhere. Yeah, here. I saw this minus 166. I say, wait a minute. We have here minus 154. And here lower, we have minus 166. So for sure, like there is something that is happening here. And then I exit, and like at the same time, we saw like the price back higher. Yeah. Wow.
Nice.
Beautiful.
Yeah.
That was
You
awesome.
got him today.
Yeah, you smashed it, Aymane, man. You deserve the award today. Did it all right.
But
Did
I was patient today. Like I was sitting, and this is the thing, because scalping, day trading is hard. My experience as a scalper or day trader, 1 hour 30 minutes for me is the max I can stay in front of the chart. Because I am 1 hour in front of the chart. If I surpass 1 hour 30, I will start making bad decisions.
Yeah.
So yeah.
No, that's very, and once again, right? Like patient day, and look how it turned out, right? Like patience pays.
Yeah.
Seriously.
Absolutely. In your case, it did. In my case, it didn't. Patience definitely didn't pay for me. Ruined me.
It happens. It happens. Let me throw up my. It's been wacky for me lately, guys. Like these currency pairs are all over the place.
The whole market is just finished. I might just take a month holiday and just not trade. I mean, it's just the markets. I find them hard to read lately. They're just so unpredictable.
Yeah, I agree. I totally agree. And I feel like it's just like typically what I look at, right, is just all over the place. Like even if I'll start here at EU, then I'll come back to UCAD. That's what I took today. Like majority of these setups are just nothing. Like this is nothing for me. It's no even point of looking at it. A lot of these setups are just weird looking, and it's just all over. It's very rangy, or it's up and down. It just looks nuts. It looks absolutely nuts.
Yeah.
So I found myself, typically, I'll be honest, it doesn't take me longer than 10-15 minutes to go through like all the pairs. But lately I've been spending like 30 minutes, like almost trying to find something and making sure I'm not missing anything too, right?
Yeah.
But no, it's just nothing's really here. Like as I go through all of these, none of this is interesting. I think I showed this to I was on with Paul and Jannie yesterday, and someone asked about GU. I was saying what I would be looking for if I was to be interested in GU. So as you see, that didn't even play out. So I wasn't interested in GU. I'll leave it on there just to see. GJ is just, I don't know why it's going so slow. Come on, you can do it. All right, anyway, my point is there's not much out here for me. I'm just going to get right to UCAD, which is what I did take today. yeah, super interesting trade, guys. Right?
Yeah, this is looking good. This is looking good.
It's doing great now, but if it wasn't for that whatever had just happened, I was out the money. Like when we jumped on, I was right at break even, like hovering right around it. So whatever happened, it did, whatever. But once this alert goes off for me, this is when I'm going to move my stop loss to break even.
Yeah.
And take some of it off the table, right? So, but yeah, nothing too much. I did get in this. I'm in at 63. Right, yeah, 63. So right around here, it's luckily working out for me today. So it is up 63 pips.
Nice.
But I'm sure you guys can see what I see here as far as the once this 5200 crosses, I'm looking for M's off the 200. Right, as always. 5200 cross. Looking for MW off the 200 EMA. And I just want to put that I'm in level 2 here, right? So as soon as I see this, obviously I already know what I'm looking for. I know where I am in my like the pattern with the structure, so to speak. So I was looking for the M's. We got this beautiful, beautiful first leg, right? That came on around, it ran down. We got this up here. And I was explaining, I think on Monday, look how close the second leg came up to this, nearly the exact price. Minus this wick on the left-hand side, which, to me, it doesn't really count. I'm looking for more of like the bodies, but this is nearly to the T on the other leg. So once I seen this come up here, obviously I had already set my alerts. I was just ready for this to come on down. And once I got this close below, I was interested in it. Now, the only thing was this close below happened at early in the morning, I want to say, right? Like technically this happened at 2 o'clock in the morning. I'm not up for that. So the next thing I was looking for was a break below this structure, which this did. And what is this? 6 o'clock in the morning. I'm still not up. I'm still not up at this point, right? So once this actually pulled back to this area, and then I can kind of see this. Let me zoom in just a bit. Once I can see this this one broke. It came back up, retested this area again. And then this candle here broke below. Now I'm good to go, right? And of course, it slipped me a little bit because I should have been in at 71, but I ended up getting in at 60, 63. I don't know how that happened, but so yeah, once I saw this, at this point I am up, right? So I just grabbed it from here. I know we had some huge news at 12 o'clock. I thought it was at 12 o'clock. That's the part that threw me off. I thought it was 12. Yeah, see, that threw me off. I could have sworn it said 12 today and not 2.
So sorry, Michael, like the spreads, how the spread look like? Is it like a big spread? There is big spread or?
Nah, it wasn't actually.
No?
On UCAD, let me see. UCAD is two pip spread. It's a 2 pip spread.
Oh, okay.
Yeah, it's so tight. I don't even really notice it. Like this, to be honest, this is bigger though. And I'll be honest, maybe I didn't notice what the spread was at that exact moment. But for this to close at 73, and I'm in at 63, that's a 10 pip difference instead of an 8 pip difference. So they must have slipped me right there somehow. I didn't even catch it. I just noticed that when I took my entry, I was a little bit more down than I should have been, which again isn't too big because my stop is so huge. But at the same time, those 10 pips do matter, right?
Yeah.
So this was super, super, super close, guys. And as you can even see, this actually wasn't even all the way perfect. Like I nearly forced this trade. You see, this says 0.89. This is slightly less than a 1-for-1, right? So I haven't had much action this week, except the S&P trade on Monday. I'm like, let me just jump in here. I put half my position on here, so I'm not in fully, but still, this was the only thing that was even slightly close for me. But yes, you guys can see huge W here. I grabbed it. My stops had to go all above here. And typically, to be totally honest, this is really far away. I should have put it like above here. but I'm super cautious, like with this market right about now. So I just to be safe, I put it, way above. I want it to be above this wick over here, which is why it's at 0.89. If in any other market, I would be comfortable with having my stop above this 200 EMA here, right? And that would have been a full 1-for-1. But yeah, just super risky right about now. And then I wanted to put my TP pretty much at this blue tracer from yesterday, right? So it's really like around here, right? Then let me put this back where it was. And it's like right here. So yeah, I'm actually just waiting for this to hit not TP, but for the move to break even. At this point, I can at least just take something off the table, take my little quarter off, right? Move my stop to break even and be done with this market for today, because this thing has been wild. As you can see, I've been sitting in this for quite some time, which I typically don't do too long, right? I took this trade at 8. It's now 1. It's like 4 hours. Either way, I would close this at 355, no matter what, like I always say. But I would much rather take some off the table and move my stop to break even before then. So
of course,
just hanging out, waiting for this to go. Now I will admit, if this, you see this alert says SL to BE, so my stop loss to break even. If this comes back up here to this price where I got the word look, I'm gonna move my stop to break even. I'm not finna even deal with this trade. Just to be totally clear, right? This is just too much going on. Now I would say, and that's the craziest thing too, this market is really messing up with my psyche, because any other day, if this closed like this, pulled back, and then I had a close below this previous structure, if it pulled back to this area, I'll be looking for another position. And let me take off all of this. Then I'll be interested in another position. Let's say if it pulled back to this area. Whoops, not long. We want to go short. I will be interested in taking this short, putting this right above here, right? And then finishing the same exact play. Yeah. Right? All the way. This would be a nice another 1 for 1.5, 1 for 0.3. But I can't risk that at this point. The thing is all over the damn place today. So I kind of got to be flexible a bit and not put on another position. Just leave it alone.
No, I agree with that. I think that's a smart play.
Yeah, it's I don't even know what's happening. It's almost like it's just too much going on. I mean, obviously we know what's going on with this trade war and all of these administration want to hit each other and hit each other back and stuff. So they got this market in a frenzy. But typically in regular trading, circumstances, that would be my play, because I'm expecting this. Because this is another break below. I would expect it to retest this same area, right? This area has been an area since all the way back here. Key level. Like, this is an area for sure. So close, which in the next 17 minutes, pull back and let me hit it again. But I can't risk that at this point. It's just end up ruining my day, probably ruining my week if it hits me too hard. So gotta let it go. More than anything, no matter what happens today, I mean, I won't lose any money. I'm not sure if I'll make any, but at least I'll, no matter what, I'm moving my stop off to break even, whichever happens on these two, because this candle just come out of the blue like this is just nuts. It's nuts.
A free trade. It's a free trade.
Michael, can you check please like the weekly time frame? When I check the weekly, it's bearish. I think we're gonna break lower. Like if you check the weekly.
Excuse me.
No, if you could zoom in.
Oh yeah.
Yeah, you see the previous week, so
for sure. And this is almost that same pattern, right? Like I will say, like I would be wanting to take this off at this 50 EMA here anyway, but this is definitely a bearish pattern, right? Yeah. We got that beautiful M structure going short. Now, how short this is gonna go, we don't know. We would want to see something like this, break below, come out, probably retest that, and then continue going short here on the weekly. That's what I'll be looking for, if anything. But yeah, this is super short, and yeah, this does give me that much more confidence that I am on the right side today. But with this market, who knows? Oh, And there we go. So I would be moving my stop loss to break even on this one. Thank God.
I can hear the
I'll be
alerts.
taking a hit on this setup today. Man, that's so crazy.
Nice and secured.
Woo.
Yeah.
I can't run. I'm over here clenching. Look how many alerts I got set up on the screen. That's how you know I was a little worried about this trade.
Oh dear.
It's like, yeah, I can't tell what's happening. I set so many alerts for this today. It is literally insane. But yeah, that's pretty much it for me, guys. Oh, I will say I did put. Oh, let me move this to break even really quick. On the TDI, I mean at 63. So I'm gonna put it at 60, 4160 is where I want to be at. If it comes back to 4160, it can have it. Get me out of here. That's how I feel. Right. But even on the TDI, I mean, we did have, and as I always say, for me, my TDI and the actual man, it's so funny. Now I want to go ahead and run down all quick. It's so funny. The TDI on my chart, they have to agree. So I got this beautiful outside the band over here with the RSI. That's how I know this outside structure is pretty much set up. Right. And then now, even though this is outside the band too, which is what I was slightly worried about, to be honest, this is why I wanted this to break below all of this. So then we had our reload too. Market baseline came above the static to come back down. And look at this. This thing just went flat here. Right. But once it started going down, the RSI line and the signal line did dip below it. This gave me a little bit more comfort too. So, so they in essence they did agree. So, but that was it for me, guys. Not too much at all.
Nice.
Yeah, there is a couple of things happening. If I can share my screen.
Yeah, of course.
Gold, gold, Bitcoin. So
what is happening with gold?
On here, yeah, 160.
All right,
so
Aymane.
gold.
Okay, all right. I'm like, wait, did I put this on here right? Okay.
So I think yesterday we talked about like double bottom here, but I was like preferring it to be here, not here. But the market always does what it wants. So we had this double bottom here, and we had supply here. We broke the supply, and guess what? We tap into this really beautiful supply zone, which, like, if we close like this today, like it could be, if we could see like a double top here, and the sentiment will change from today, we could see like gold going back to this 3035. But yeah, we had beautiful reaction from this zone right here. I think we draw it yesterday, like from 3,100 to 3,160. So it, like, the thing about this supply zones, like sometimes we reach the, let's say, the first phase of the zone, it's here, second phase, or sometimes like you can see that we take the wick first and then we have the, let's say, the reversal. So we will see which scenario like we will get. But yeah, it's so volatile. If we check the 1 hour, I think we repeated the same sort of pattern we had yesterday. Like we created the low during the end of New York session, and then we went higher. So for me, like this is sort of like a pattern, like 70% of time, like it's it works. It's the pattern where we take just one trend from the 18 session. So the New York, like I don't look most of the time for reversal, but more of continuation.
Yeah, so, agreed.
Yeah, it happens so many times. Any thoughts, Michael, Coach Sam?
Yeah, I mean, agree. I say the same exact thing. Typically in New York, I mean, obviously there's something like today or whatever, right? But even if you look at the UCAD trade that I just showed, it's the same thing. It's a continuation. That's not a reversal. It's almost like once it comes out, I call it the Asian box, right? Once that 1201 hits from it, now it's Asia station is officially closed. That's when it starts to attempt to go ahead and bounce around a little bit. And I'm looking for it to either hit those highs or hit those lows on the opposite side. So that stop hunt and then continue the same direction of the trend that was happening earlier.
Yeah.
Yeah.
Yeah, I agree. I mean, I said as well, gold is going to go up for a little bit, and then I think it will continue going down. I've got the exact same area on my chart as well that we've just dipped into. And there is another area above that. Whether it will get to that area, maybe, maybe not. But this could be the area where it'll start pushing down again, I think. Yeah.
And then we also have the fundamental bias on our side too. Everybody's probably selling stocks and buying gold, right? With all of this crazy stuff. So we do got that extra piece of fundamental on there too.
Yeah. Exactly. Yeah, we have also, like, if we dip down, we have this area here, which is really interesting. 2,961. It's daily zone. Yeah. So should we check Bitcoin?
Let's have a look at Bitcoin.
We got to. We got to take a look at Bitcoin.
Is it at 50,000 yet so I can buy it? Let's have a look.
Right. That's when the sale goes on. Buy one, get one free.
So Bitcoin, it's quite interesting because, like we said last time, this for me, like, this is an important area of interest. Like, we had sort of, let's say, double, not the weekly is not closing yet, so we have sort of like double bottom here. Yeah, so we could go back here to this resistance between 88k and this resistance here at 94. And
that's exactly what I said to Jannie and to Paul yesterday. The exact same thing that you just said, Aymane.
Yeah.
Especially if it comes up and it breaks above that little previous structure right there. Yeah, if it closes above that, I mean, come on. That would be a nice buying opportunity for sure.
Yeah, and like Bitcoin like to repeat like this pattern. Like, if let's say if we have a failure and then we went down, we need a failure here to go up, let's say.
Yeah, I call those resets. Yep, it's a reset long right there. That's classic textbook trade.
Yeah, and this is like the only structure, let's say, because it's structure like that I use and I really like, because it has so many like meanings. Like, okay, what does it mean, double bottom or double top? Okay, the buyers pushed the first time, came back, push again. So it's a really good pattern. Yeah. So again, like, if we break it,
that's like for me, right? The M's and W's. Like, you can't always trade all M's and W's. You need more of the story with it, right? You don't just trade all double tops, short all double tops, and buy all double bottoms. That's not how it works. You still need to have a bias and still need more confluence with it, and then it makes it as high probability setup as you think it does, in essence.
Yeah,
like how this area is here. This is a great double bottom opportunity. Even if you look to the left, zoom out just a little bit more. Yeah, okay. And then go to the bottom of that blue wick, the blue candle that we on now. Like, go to the wick of that candle, that open candle that's on now.
This one?
No, so the current candle, the open candle that it's on now. The blue one.
The blue one here?
Yeah, I hate that we can't annotate on here. It sucks. Definitely accurate.
So this current candle, weekly candle, or?
So the open right now, the blue one. Yeah, there we go. Now go to the bottom of it. Go to the bottom of that. Yep. So look at that. Look at that structure, right? Look to the left. This is literally it's bouncing right off this area.
I don't know. I'll be honest, guys. I've got the opposite bias at the moment with Bitcoin. I think it's about to drop. I see what you're
Yeah.
seeing as well. Now that's put a little like thought in my head saying, have I?
But
Ooh,
the,
I can
the
see
thing,
both
the thing,
sides now.
Sam, is like we still have 4 days for this weekly candle to close, so it's still not yet confirmed. For me, like I also like think like, okay, maybe we're gonna break this zone right here. But if we broke this zone, I think like we will go to the 43K. This is
Let me show
my
you.
humble
Let
opinion.
me show you what I see on Bitcoin right now. Hopefully you can see my charts now.
Yeah.
Yes.
Cool. Yeah, so for me, we broke this gap right here. And I would say we proper broke it. We did break it slightly before, but it wasn't really a proper break, right? It was more just wicked out. This time we did break it. We came back in, rejected again. It did create, you're right, a double bottom, that W structure, which is a little bit, but we've had this random push up again, whatever Trump did just a minute ago. But I still, until if we get above this area, then I'll be potentially looking at bullish. But I still have a bias that within that area somewhere, the market's going to slow down and we're going to drop. I think this is like nothing more than a fake out right now. I don't see it right this minute. I don't see it. Let me go on a smaller time frame real quick. Maybe I can see something volume wise to my. Nothing's loading, man. Not even my volume profiles load. What's going on?
Yeah, that's what I said. The market had messed up trading view today too.
Bro, nothing is loading. All my volume profile isn't loading right now.
Yeah,
Sam,
that's not
Sam cannot see.
I'm like, I don't know what's happening.
I'm blind. I'm completely blind.
Right.
Oh, there we go. There we go. All right. There's a gap here, which we're in right now. The thing is, the volume is never complete on Bitcoin. That's the only thing. That's why I would never trust it too much. But it did respect it before. And then we have a point of control. We've got multiple points of controls all around that area. I mean, this whole consolidation area. So it was definitely going to slow down if it gets to that area. It'll be a kind of a break, a slow down in momentum. So there's still 2 big kind of places it has to break through before I consider, okay, this could be going up to the next level. I feel the path is clearer down below. Does that make sense?
Yeah.
Like it has less to kind of break through going down than it does going up. But I mean, again, Bitcoin, I have no experience with it. I don't know how it moves. I don't know how it likes to respond to things. But if this was like the S&P, that's how I would view it. I would be looking at shorting it like soon. But I mean, let me look at the volume within the footprint. I don't think it's going to show much because this is from. Okay, well, there you go. I've never seen that error before. That's nice. What is it talking about? I don't know, guys. I think TradingView is broken.
Today is not your day, Sam.
It's just nothing is working. What is going on?
Something's going on. Yeah, Sam, you got to step away, blow off some steam today.
I give up. I retire now. Yeah, I don't know. The whole TradingView has crashed or something.
This damn thing is just falling. It's so crazy.
I can't do anything.
Let me check it out. My screen.
USD CAD?
Yeah, USD CAD is.
Yeah, I see.
Yeah, go on. You guys jump on, do your thing. I'll remove that.
I'm done for today.
This thing is super interesting.
Done.
So let's check out. Well, I got these levels on here, right? So I just got these levels on here just because I want to know. But this is the weekly, right? To me, this is just very, very interesting level right here. Right here. to me, it's not a coincidence that it came right to the point on this side, right over here, and then that same area has just hit here. Like this is that support has now become resistance. Broke through. This is the retest to continue to go long. Again, this is the weekly, so it's a bit far out for me to actually be really checking out like that. But on the daily, I like to look at this on the daily. When I do speak with Paul, right? We go through all of this. I said this last time, and I'll bring it up again, but this for me is just, oops, what's happening here? Oh, trading view is okay. Well, all right. I have no idea why it's doing that, but okay, let's just try to work with this. Once that 5,200 crosses, as always, I'm looking for loans, guys. Oh my God, why is it doing this? It's like stagnant. It's like I'm moving too fast for it or something. All right.
I think it's trading view itself. Yeah.
All right. I spelled it right at least. All right. So we got this area off this 200. What? All right. Wow, I can't believe it's doing this. Well, anyway, we got that area off the 200. We got this area off the 200. We are now here again. Yeah. This is the hey, maybe 3 times the turn for price action to see. Right? But over here, and what I thought was super interesting was the fact that once price broke below here, right, and we had a close, typically that's short, right? So it broke right here on, what day is this? March 10th, it broke below for the close, below the 200. Right, the day right after it came back above. That's the first leg for me. Then 2 days ago, right, on the 7th, right, is this the 7th? Yeah, the 7th, it closed below again. And then the next day, right, which was yesterday, it closed even lower. So this is definitely lower than the first one over here. And now we have this all the way over here. If this comes up and closes back above, this is not short to me. It's definitely not short, especially not yet. And then if it closes above this price here, that's why I really have this level here. But I'm looking for a close above this 50 EMA. But as you see, price has not closed above the 50 EMA since February 20th, right? It hasn't been above it since then. So as soon as price closes above this 50 EMA, which this price is, what is it, 88,000? We can say 89,000 basically. It's 40, 60, 30, $35 away from 89,000, right? Then I would be, to me, this is definitely long at this point. It's already giving hints that we're not going to let this go any shorter than this on the weekly that we just looked at, coming down to the pip. And then in this point as well, this point here and this point here, this is that classic, to me, that classic W. If this closes above here, that's it. To me, this is going to be definitely long at that point. So I was telling them yesterday, I'm not long, I'm not short. I'm in the middle right now. But
yeah,
if I had to pick, and I said this yesterday again, I'm 60-40, 60 long, 50 short, right? Which is almost 50-50. You can't really take trades off that information, but this is definitely a key level to me. And I'm just looking for more price action to kind of go along with it. Now, on the downside, I will admit, I will bring this up too. That's not biased long, right? But if we do see something where price comes down and we have this 50 EMA and it's 200 EMA and these cross to the downside at that point, I'm going to be officially short, right? At that point, if these two cross, this is the 5,200 EMA. If these two cross, man, I feel like I'm moving way too fast for this thing today or something. I don't know. If we get this 5,200 cross, right? We're gonna be in level 2 shorts. That's what this would be for me. So then I would definitely be short Bitcoin. Now I'm not gonna short it because I wouldn't short Bitcoin, but my bias would definitely be short over. Now it's neutral. I gave the scenario a moment ago that hey, if it closes above the 50 EMA, I'm long. But if this continues to go down and the 5200 cross to the downside, then I'll be short.
Yeah.
So that's like my if then scenario.
Yeah, definitely.
Right.
It depends on the weekly. For me, it depends more on the weekly how it will close.
Yeah.
So if we close strong, maybe we can like visit the resistance on, let's say, like the 88 or maximum 93. So for me, like, but it's low probability that we will create new all-time high, and especially with all this sentiment like in the markets, it's not for me. I don't see it, but everything again is possible. I am more of like, okay, we're gonna give it another leg to the upside, like just to the 88 or max like 93, and then go back to the 70 area, 60 area, and we will see how this area will hold, like the area between the 81k and 67k. If we hold it, okay, it's good, but if we didn't hold it, again, 43k, 44k. So
it's gonna be horrible.
it
Look, I
will
didn't
be-
even drop my levels for that short. I'm like, all right, if this thing gets to 73k, which it was right there, it would need to close below it, not just touch it. It would need to close below this whole structure. If I can see a close below all of that, I mean, obviously, I would already be short because, as I mentioned a moment ago on the daily, this would have been crossed, right? So I would be short. That would be my next level, though. And then from there would be 52k.
Yeah.
Now, I don't have anything written or drawn out lower than 52k because I'm just not going to mark that up. But if this does hit this area and this alert goes off, then I would mark out the next area on here, which I don't want to say it'll be here. Anyway, I'll mark it out then. I'll see what it all looks like. But on this weekly, what I would like to see also is if we can get a candle to close, this candle to close above this 13 EMA, that will give me some confidence that, hey, the sentiment probably has changed once again, that this probably for me will be more long than short, which again, even though this right now is on the weekly chart, if this closed above here on the daily, that's the 50 EMA that I was talking about. So it's the same thing, right? So it really wouldn't even matter which one it closed on. It's really this price point. It's really this price point, which is more important. This will probably come down just a little bit. Maybe let's do 90,000. Yeah, let's do 90,000. If it gets to 90,000, to me, this is long all day long. So yeah, that's Bitcoin for me. You went over gold. Let me check out gold really quick, just to see. Yeah, see, so for me, this thing is so high, I couldn't even tell you what's about to happen with this. Like, this is no. Yeah, this is very, very, very interesting. Oh yeah, TradingView is tripping today.
yeah, it is.
Yeah,
for me
it just
also.
took forever for my TDI to come in. Yeah, this is a whole thing right now. Right. If anything, for me, this is still much longer than short. I can see that these EMAs are about to cross here shortly. Right. So maybe something like this. Right. And once those two happen, as I always mention, you're looking for W's off this area. So this might do some funky stuff, but it'll end up, I'll be looking interested in moves like this, going back to the upside and just taking out probably this area. In fact, I'll set an alert for this just to see. Just do some all-time highs here. Right. Yeah, I'll be looking forward to do something more like that. So yeah, definitely long. Let's check it out on the daily. See what it looks like. Yep. So this for me on the daily is just ridiculous. I can't even tell what this looks like. This thing is constantly making all-time highs. When I look at this chart, it's so unclear. It's like my eyes are closed. I don't even see anything. It's just dark. That's how high this thing is. It's insane.
Yeah.
Like if you could check Euro USD, like maybe on the 4 hour.
You said crude oil?
Euro USD.
Oh, Euro USD. Okay. On the 4.
Maybe something like.
Yeah.
Oh, look at that.
Yeah. See. Yes. So this isn't horrible, right? Definitely got a little bit of motion going with it, but yeah. Only thing about this to me is this is such a key level right here. We got a lot going on right here. Like this is definitely I'll be waiting on this. You can't even tell what's about to happen. To me, this could go either way. This could come on down here and retest this area and drop. Will be one, right? Or oh dang, I didn't mean to do that. Or this thing could totally just play around, just go back the other way. It's so hard to tell. Yeah, I can't tell what this will be just yet. It's not enough context for me. Let's check out the daily. See what the daily looks like.
Daily is rejecting.
Oh yeah. See, this is even more confusing. Normally, when you kick it up a time frame, it gets clear. This is even more confusing. So for me, right, I see this 5,200 cross. So I would think I'm going short on this side. Whoops. On this side, but we also just got this 5,200 cross to the upside now, right? So this could really do anything at this point. Now I would be leaning more towards price coming down, making some type of W structure, and then going back along, right? Stops will be below here, entry here. My TP will be somewhere up here. So I would be looking at something like that, maybe on the daily, some type of pattern. But yeah, this is too much. Because eventually what's going to happen is this 800 EMA and these EMAs are going to cross too. So that would give it more context that it's going to go long, but way too far out. This is like two in the middle for me. I can't tell what this is.
Yeah.
I think that's it. Let me go back.
And especially now, like there is the FOMC, I think. It's what time is it? Like 8:30 or that's me.
So for me, it's 2:13.
Okay, so yes, so yeah, it was at 8. Let's see.
Yeah, so about 13
But
minutes ago.
I think there will be no change now.
Nah, it's almost too short, right? Like this would have moved much more than this, especially for it to be on USD. I think that big move that we saw was kind of like already accounted for in a way.
Yeah,
like they already knew this was about to happen. It seems like. But yeah, that's really it for me, guys. What else could we possibly look at? We got any questions or anything?
The GBP USD, if I can.
Yeah, actually, what's happened with the pound? I haven't looked at it in a while.
Let's check GBP USD.
Sam and Michael back together. Robert's so funny. Yeah, I think man, Sam on like 4 days a week together. Session 3.
I know. It's awesome. Oh, the pound did. Okay, very nice. It did reject.
So this is the pound.
Nice.
I think we draw this area here, like last week, I think. Yeah, last week. But still, it looks bearish. And here, let's see. Sam missed.
I'll always regret.
Don't remind him.
That's the one that got away from me.
I will draw something so we will remember. Here's Sam.
I guarantee you that will become like the all-time high for like the next 2 years or something. And I was like, I
Right.
could have been in it. The pound will never ever break that high. Like that is the all-time high. 20 years in the
Yeah.
future. Like anyone who sold there will be a very rich man today. And I would have missed it.
Like, let's check how many points. Like, yeah, 500 points. Wow.
Yeah, I mean, let's be honest, Aymane, though. The reality, I would have got out at like 5
Yeah,
pips.
we wouldn't It's just no way.
Let's be honest. No, but maybe if you applied like
Yeah,
what you did,
after
what
today, I
you did
would've-
today with ES,
Maybe.
maybe
But then it
you will.
would have got
you will
out
have
minus
more.
5 pips.
Hilarious. So that,
Well, it ended
especially
up
after
losing
today,
one.
I'm not holding nothing.
Uh,
So the pound actually, like, we came here, test the zone where Sam didn't answer, and like, and then, yeah. So it looks actually, for now, it's rejecting. We have this big wick for me here. We had this supply right here. Now we are in this 4-hour zone. We are creating a support here between this 1.27 and 1.2772. So it's interesting how the price will react. I think the way it look like and the way the price action is looking like, I don't think they will be like a double bottom. Maybe we will break this area.
yeah.
I think because we are coming to it a little bit slowly. No, I don't like. We tested so many times. So yeah, if we hold this area, maybe there is this here like 1.2934. Let's check. Yeah, so there is another area of interest here lower. It's weekly area like 1.20, 1.2547. So yeah, it will be interesting how it will react, well, how the price will react from this
Yeah.
area. If we will create another wick again here and we close bullish, like everything is possible with this market. So yeah, definitely
Yeah.
volatility is there.
I agree.
Yeah.
I agree. I mean, the pound has been respecting levels really nicely recently, I have to say. I'm actually quite impressed with the pound. If I show real quick the screen. Add. Cool. So yeah, these so we had that push down, respected really nicely, that area. And then we finally broke through this area. And then from like the last analysis, I said I will expect a kind of push up back into this area and then a continuation down like these arrows. And that's what we had. We had it push up and now it's pushed down. It's still very choppy. Like it tried again, came to this area, did the exact same thing. It's not going to break this area, I don't think, anymore. I think now, okay, we might go sideways a little bit, but eventually in the near future, we're going to break below here. And then to really kick it off, we would see that happen.
Yep.
And then we're dropping down to, I don't even know what the next area is, to be honest. I think it's going to drop quite a bit then. Trading view, man. There we go. Well, I can't see. I'm assuming that's the next area. I can't see because the volume won't load. But yeah, I'm assuming that is the area because there's a box there. but the volume won't load for some reason. Trading views just they better sort it out by tomorrow. Else I can't trade.
That's right.
I'm not going to be able to trade tomorrow. Sorry, guys. Trading view couldn't load the simple volume.
But yeah, it's tough markets. Like definitely, like if you are new, like it's gonna play with your emotions. Like it's definitely like what Sam did. Like when I see like sorry, Michael, what Michael put in his chart. Like okay, if we came back here, I will break even. If it came, you gave all the scenario, and I think like this is like it's a good way to make a decision outside, like you are not yet emotional, let's say, because you make those decisions before you enter a trade. Okay, if it's happened, if this scenario happen, I will do this. If it's this scenario happen, it do it. And it's 100%. Definitely good way to handle things. Yeah, volatility is here.
It's one of those things too, where like, right, like typically you wouldn't do something like that. But I think like being a trader, like, right, you have to have this air of flexibility there. Like you can't just stick to the same thing you would always do. And in volatile markets like this, when things are all over the place, you got to have some flexibility there. Because typically, I mean, I wouldn't even have if it comes back here, I'm going to take it. It's just, hey, it's going to get to my move it to break even point, and that's it. There wouldn't be an extra, all right, if it gets back here, then I'll take it off. But the market is so crazy right now that we as traders got to, evolve. This is that if you were a sailor in the sea, this is where you got to, I don't know what the terminology for it is, but this is where you would not be all relaxed. You got all your men up front with their telescopes looking for stuff. Like this is a very, very up and down sea, right? And we need to navigate it the right way. And just doing what you would normally do is not going to cut it. It's just not.
I agree.
Now, like it's been like with this volatility, it's been 2 weeks now, or 2 weeks and a half, I think. Yeah. I think now we get used to it a little bit. So even like to the traders who didn't adapt to it before, you had 2 weeks, like 2 weeks to adapt. So so I think for me, like it's good and bad. Like if it's in your favor, if you are in a trade, and
it's great.
It's great. But if it's against you, it happens so quick. Like
I always use the same terminology where I say like a smooth sea never made a skilled sailor, right? Like if it was easy, you can't reach your next level of like your expertise if it was easy. It's like imagine, I don't know, LeBron James or Steph Curry or Michael Jordan playing the sorriest team in the league. Yeah, they won, but does it really count? Not really. You know what I mean? Like, of course you were gonna win, but they get that extra level of expertise and just really grinding their teeth out when they actually have to play real competitors.
Yeah.
Right. Like that's where you learn. That's like learning from your losses versus your wins. Yeah, it's good. Definitely dig into your wins. Like you should. But where you really learn is your losses. Like, what did you do? What happened? What do you not want to do again? Moving forward with that. So good and bad, like you said, Aymane. Good and bad.
Good and bad,
yeah. Wow.
Definitely
tough, guys. Definitely tough. And I don't have many trades like with my setups as it is, right? Because I'm trading a higher time frame. I'm holding longer throughout the day, as you guys can see. I'm like day trading it, so I'm only getting 1-2 setups, a week maybe. But this has been tough. I'm getting like a half a setup in a week. So definitely a little bit interesting.
The question is, are you going to miss the volatility when the markets calm down and they go back to normal?
Yeah.
Are you going to miss it?
Yeah. And that's the typical question, right? It's kind of like it's you can use any analogy, right? But it's a slight excitement there, right? Because we normally say, "Oh, it's boring. I come here, I do the same thing every day. It's boring." And then like, man, I wish I could get some excitement, some volatility in here. The volatility comes, oh, I'm scared. I don't know what to do. It's too rangy. I don't know what to do. And then it leaves you like, oh, I think I kind of missed the excitement. I think I missed all of that. Oh, make up your mind. You want it hot or cold? Who are you, Goldilocks? Is it too hot? Too cold?
Absolutely.
I think for me, like if on the NQ, like if we are the ATR on the 1 minute is above slightly 20, like let's say 20 points in 1 minute candle. For me, like this is enough volatility. But like in the summer and July, like when the volatility drop, like you see like on the 1 minute candle, you see like 5 points in New York session, 5 points, 4 points. For me, it's a little bit hard for me to trade. And scalping, I don't scalp mostly on the summer because the volatility drop like 4 points in 1 minute candle. So I don't like use this strategy. I use just A plus setup, 15 minutes, 5 minutes, and But we have to adapt. Like market is changing a lot. You have to adapt. So
100%.
Definitely.
You gotta have that flexibility. And I'm the same, right? Like it's only two main times really where I feel like I step back. Now I would say I honestly don't look at the charts at all. It's like in December, like those last 2 weeks of December, first 2 weeks of January, I'm not really looking at it. And then those, I think it's 6 weeks in the summer that I'm not really too in tune with it either. The volume falls off way too much for me. But this is so crazy, guys. Before we jump off, I know we're going to jump off in a second. I think I might have mentioned this to y'all, right? So since January all the way until Q1, so like March 31st, I had a dev create this session momentum strategy for me that works in London session. It's trading GU and GJ, right? And this thing, it basically, the ATR is involved. If the ATR from yesterday is too high, I won't take any trades. But in Q1, it was the highest I seen was up 14%. It closed at 11.1%, right? So I'm like, I'm about to put this into play, throw some money at it, whatever. Guys, this thing has taken one trade with all its volatility because the ATR is exceeded, so it's not taking any trades. So it went 3 months with taking trades, 2 trades a day sometimes for 3 months straight. And all of a sudden, April the 2nd, it's taken 1 trade since April 2nd because of this. So I'm sitting here looking like, what in the world just happened?
Yeah. Spend all that money for a developer, can't even use it now.
I thought I had me a whole little robot on the side. Like, all right, I'm gonna throw me some extra money at this, maybe extra, few figures a month over this robot that got into play over this setup. And then this happens. And it's like, I can't, what's the chances of that? What's the chances of that?
I'm telling you, I truly believe that the market has like a little person. There's some virus. At the moment you log into TradingView or any charting platform, there's like a big central virus that turns on your microphone and camera and does whatever the opposite of what you want it to do.
It's crazy. Absolutely crazy.
Start trying to trick it. If I'm in a buy position, I'll be like, please go down, please go down. Watch it just go up.
Yes. So I'm sitting here and I'm like, I can't believe that just happened. Like I wanted to add that to my repertoire. And like, again, Q1 it did great, but the start in Q2 was like, seriously, like, are you serious right now? I can't. It's just all over right now. It's like, you know what? Just continue to be patient, wait it out. Everything will be fine.
Yeah, all will be good. But opportunity as well, man. I've got to say, I've probably had one of my best trading weeks since all this stuff has happened because it's just moving so much, Yeah. It's beautiful, and I thought I would have a really good one today. So I tried to hold. I tried to go for the big nug. The greed set in, and anyway, that is time. Michael, Aymane, good session as always. Really good.
Of course.
And Yeah, I think we're back again. Same time. I know I'm with you, Aymane. I'm not sure if you're tomorrow, Michael, with us, or if you're in a different session. But either way, yeah, it's gonna be awesome.
I think same session.
Yeah, I think tomorrow.
Session,
Yeah,
yeah.
same session tomorrow. Yeah.
Perfect.
Yeah.
All right.
Perfect.
Well,
Yes.
I'll see you guys then. Have a good evening, morning, wherever you are in the world, and to all the viewers as well.
All right.
Catch us
Take
tomorrow.
it easy, guys.
Take care, guys.
All right.
Bye bye.